Good morning, everyone. I'm not late. It's 9 a.m. Dear Lord. All right, I got to check on shorts available to borrow again. See if this fucking updated. Still no update. This is not probably a good thing. I'm gonna update Reddit with this. Good morning, everybody. 30 seconds late. Kiss my ass, all right? It's on the same minute. You're not my boss. Rip perm. It's still really friggin' curly. 10K I borrow. 1.1. Yeah, I know. 1.1 on fidelity. The eye's a little better this morning. It doesn't hurt as much. I think I just like shoved my face into my pillow and like the pillow scratched my eye. Like the pillowcase. So it's looking like a million shares have been borrowed to short right now. I'm guessing, but maybe they expect movement because of the 005. What kind of thread count scratches an eye? I don't know. I feel like my sheets are like they're not fancy, but they're not sandpaper. Nice, no one. Do they want us to day trade? No. I fucking definitely would have day trade GME today. Too much uncertainty. What's your take on 005? I mean, if it's implemented and like if it has any teeth, I still expect the DTCC to only use it on like to only actively use it on like small funds, right? Like if there's small funds that are short GME, like I could see them fucking them and leaving like the big boys like Citadel and Melvin alone. That way they give off the appearance of like doing their job without actually doing it, you know. Government 101. But we'll see. Who knows? Yeah, I think they're preparing to contain big movement. Here's the thing: can they contain? Here's my question, right? If that's how they do it, right? If that's how it plays out, can they contain like the possible squeeze from all the like smaller funds, right? Like can Susquehanna, Citadel, and Melvin uh contain the potential upside of all like the smaller short funds attempting to cover because of the new rule. I don't know if they can. What's my prediction for today? It's either going to be flat as hell, right? Because we have like no real volume, or it's going to be nuts because of 005. It's hard to say, right? I mean, technical analysis in the last 4 days has kind of fallen by the wayside. Like, we can watch intraday price movement, but until we have an announcement from GME on whether those shares are completed or the sale offering is done or what price point, like, we really can't analyze the stock the way we normally would, right? So now, like, now we're analyzing based on like speculation, which is not really my strong suit, or anybody's. Eyes better. That's why I have the light on. Just trying the Titanic's pool. Getting anxiety. Oh, Charity, don't get anxiety. What's your end of week prediction? Fucking the stock will probably still be here. I've definitely not said that all along, Andrew. But this is definitely a moment where TA is not as accurate as it could be. I'll be the first to admit it, right? I'd much rather admit that, like, there's a fundamental change occurring on the stock right now, and we can't predict the nature of how that's going to turn out, than to, like, go back and fucking edit my Elliott waves over and over and over again. Because that just, like, ultimately, that just sows distrust in technical analysis. Instead of just being honest and being like, I have no fucking clue. I'll tell you right now, I have no idea what's going to happen today. We got a lot of shit going on, though. iBorrowDesk updated. Awesome. So 600,000 borrowed. Or 700K borrowed. It's 100,000 was borrowed last night, before close, Ryan. So it was down to 1.2 million yesterday. So it's 700,000 borrowed this morning. They short Starks in the pre-market afterwards. Yeah, but it's harder. If you sell a share at market, you still have to have a buyer, right? So, like, if like, what do we got? We're up to like almost 100K volume now. That's interesting. I've actually got fucking Fidelity open now. Fidelity's still more than 1 million shares. I wonder if Fidelity and iBorrow are just tracking the same pool. Like, if 500K of the available 1 million on Fidelity is from the same pool. TLDR and Crayons DD, and if it's legit, I haven't seen it. It's just like a synopsis of the movie, or like the documentary that he's referencing, Inside Job, and then like some speculative statements about GameStop. It's fine. It's a nice piece. It's well put together. I don't have any issues with it. The information he's offering is correct. I don't know how it ties into GameStop, but yeah, Inside Job's available on YouTube for free. Think about the price today. I mean, I don't currently have any opinions. We'll see. I gotta see what happens at open. It's like the pre-market's kind of all over the place. 700,000 shares have been borrowed. Like, we could see a big dip, but if the buy pressure is high, we might shoot up. Apparently, they're offering some sort of pickle cat. Someone sent me a link with that, which would be funny. We're hanging out in here with Ryan Cohen. The price is wrong. Yeah, that's a good synopsis. I like that. We're down $7 in the pre-market though. TTT fucking went off a cliff. That's not good for me. Fix isn't gonna update for a while. BTC coming down now. It looks like it's completing its Wyckoff distribution. So downside on BTC, I guess, for a while. MG, thank you so much for coming along, Johnson, dude. I appreciate the membership. As always, let me remind you guys, every Saturday is our members only stream from 12 p.m. to 2 p.m. Eastern Daylight Time. If you are a Long Johnson or a Dillionaire, feel free to come join us in that. I've heard it's fun. What else is streamed? Shouldn't be. Bitrate's good. Terminator Pickle at 9:30. $0.31. Oh, that was Dogecoin. Flaccid. Why would I watch Inside Job? I've already read the DD. It's a little, it goes a little deeper into it, I guess. Yeah, Pickleback, I'm doing okay. Did I fucking unmute myself on the Discord? I did. Okay. Yeah, I'm doing alright. A little tired. Haven't had enough coffee this morning. I've been scrambling all over the place. I had a couple day trades that I had to do before market open. So I've been up since like 3 hours now. But I like woke up and like my coffee pot wasn't on because someone fucking unplugged it. If you guys can, yeah, drop a like. It definitely helps the channel out a lot in the morning. Gets more people in here. Just, you know, getting good information. Hedging against paper handing. Whatever you want to call it. Sleep. Did you guys see that shit with trades? Like, implying that, like, fucking we're manipulating the stock or some shit? Or stocks. And, like we're part of his fucking AMC bullshit. coffee bean do you recommend? I don't know. I like Robusta. Robusta's nice. Don't forget, guys. Today at 2 o'clock is the Fed meeting as well, like the announcements from the closed door Fed meeting. Um, God knows what fucking JPow's gonna do to the market. I hope he crashes it. Get some people from Matt Cores in this channel. Fund that guy. Exactly. Good morning, Agent Evan Skern. Lavazza. It's so funny because if you go to like the other channels, right, everyone's like, man, JPow's going to come out with good news and the market's going to run and everyone's going to make a bunch of money. Woo, bull market. But in here, I'm just sitting on like $500 worth of short positions, just waiting for the market to crash and then a bunch of GameStop. We'll see who's right. Probably not me. Pickle Art YouTube channel sure does talk a lot about stocks. Yes, praise view up. Was the Elliott wave hype over? Probably, because now it's all going to be about like inside job. Like this entire week is going to be dominated by posts about inside job, memes about inside job, fucking Matt Damon narrating things. We decided to stop all this finance stuff and revert back to the barter and trade system. I mean, I've said that for weeks, Brian. Like, if the crash, if GME's MOASS causes a market crash, we are the scapegoat. Death by 1,000 Cuts, DD. I didn't read it. I read, well, that's not true. I read like a paragraph of it. So we're the gay bears all along. I mean, right? Like, if GME causes a market crash and it MOASses while the market's crashing, then aren't we short the market? Like, aren't we the bears? Who knows? It's hard to tell. It's a fluid system. I don't like to identify as a bear or bull. I just like to make money. I'm a pickle, you know? I mean, I didn't read a lot of the 1,000 Cuts DD, but I was kind of I was in a chat last night with the person who wrote it. They seem to be talking about stuff. You saying you're a cis pickle? Just a pickle, man. You can't don't fucking slap your norms on pickles. All right, they're just pickles. Let them be what they are. I like to identify as the future owner of Japan. I just like to play the bull side of short positions. So I'll buy calls on the SPXS. Biffy Gordon's wife again. I'm still thinking how to effectively do a Terminator pickle. Do you have connections with Home Depot and the quant apes? They seem very useful in gathering information. I mean, yeah, I can talk to them if I felt so inclined. I know, I'm getting famous, right? Interesting. Looks like a little bit of a bounce on C13. Quite a lot of volume in the pre-market today, actually. Furman's big short attack today. Possibly Crossbones. A lot of shares borrowed. 700k shares borrowed. Could be a wild fucking ride. Maybe just dropped to 10k. So all the shares are gone? Are you serious? Yep, yep. I'll update Reddit with that real quick. That's fucking crazy. Fidelity still has 1 million. Yeah. I don't know if Fidelity is lending those out to. So Fidelity has them listed as. They say they have 1 million shares, but they also have them listed as hard to borrow. Is GME bearish, bullish, or bearish right now? Please, someone. No one knows, right? Like GME is either a bear position against the overall market or a bull position for GME investors. They unloaded everything. I mean, I don't know, right? Like in the process of unloading everything, they would fuck themselves. So if they slam the stock down, they're gonna that's gonna just cause people to buy it. Smoother, thank you so much for the donation, dude. Obligated to announce that the money offering. They're not obligated to announce it immediately. They have like some leniency on that. I've seen dilution offers be announced like a week after they're completed. I've seen them announced like the day they're completed. I've seen them announced during market hours for just like really crazy shit, right? So like although I don't think GameStop will do that, I'd be very impressed if they did. I don't know if 005 will make any significant changes or not. We're going to find out today though, right? As it is now considered in place and active. Secure in before open. Bullish. Morning, Secure. See, FOMO shares are a month after they did it. So the other crying down from Melon or something. I don't know, Wolfie. I didn't read Rensel's post this morning. I was busy doing real things. So don't fud me to death, but I'm bracing myself to see the share price start with a 1. Plot twist, 1,000. Buy yourself something nice. Thanks, Digital Kid Time. I don't think I get another chance to buy below 200. I mean, maybe, right? Shit, if it dips below 200, I might be buying some more. Okay, Ty. Kenny's angry. As also, if you guys can, just drop a like. If we get a big dip this morning, as many people as we can get in here, the better to explain what's going on. Yeah. Also, if you guys haven't, subscribe. I make videos and stuff about things. Pre-market W formed, winning. Kim Sim. Price. Just here for see the show. Thanks to the last. No problem, Kim. Thank you so much for the donation. All right, yeah, no links from Zakir today, guys. Is you Korean Michael Burry's DD account? Absolutely fucking not. Who the fuck is this Trey guy? Exactly. Countdown on the screen? I don't even know how to begin to do that. I barely know how to stream. Okay, Jark. Now you're asking me to be a streamer, like to know streamer things, to have animations. It's a big ask. Got my pops to dump AM, so you just load it all up on GME. That's awesome, Bristo. Cool. I think AMC might tank today, so it's not looking good for them over there. Trey might be in the hospital. Are you Michael Burry's YouTube account? No. I don't know if J Pow's gonna talk today, so I don't expect good things to happen, I'll tell you that much. Nothing ever happens on good on days where J Pow talks. There's a clock on the bottom of WeBull. You just can't see it because I'm in front of it. TK subscriptions for the channel. Is that still on deck? I mean, if we need them, yeah. So far, I don't think we've run into any data that we don't have available. I guess like long option chain data, but like I don't think it's very pertinent. But yeah, absolutely, Mountains. If there's anything we need, I'm glad to pick it up. We had 360, 200 puts sold. Interesting. Ooh, we got some option stuff that just rolled in. Puts bought. Lots of puts. It looks like hard to say bought or sold. Huh. Ding ding. Let's see, puts. Jesus. Look at the fucking open interest at 200. Christ. We have a shill? Do we? Where? Buy, call, sell, a put, same strike price. Like a collar? Possibility of market crash before MOASS consequences? Ah. Could be bad. Could slow MOASS down. You know, I mean, like, if you think AMC is a distraction, imagine what a market crash would be. So we'll see what the delta on those 200 puts is. Yeah. Delta. Negative 28. So it's lower than close yesterday. Yeah, it's lower than the price we closed at. This is interesting. There seems to be a fairly significant amount of buy pressure. Although the volume's not super high. It's starting to dwindle. It's just opening bell, like volatility. A crash could be the catalyst, right? Unless the crash bankrupts them. I don't know. It's hard to say what would happen if, like, the market crashes. Negative delta brings us to the promised land. It's beta. Negative beta. Wait, are you talking about the delta on the puts? Or the negative beta versus, like, the market? MFA is up 5%. That's a REIT. Interesting. IT crossover on the 4-hour. Yeah. It looked like it was about to last night. Or like yesterday afternoon. Yeah, it's about to cross over. Also, if you like, if you look at like RSI for today, we were getting pretty oversold for a little bit, so we're due for like a bounce there as well. Let me check ADX. nice. Doesn't look like much is happening. I check ADX on the daily. Showing a downtrend, but that could revert. We'll see. Looks like we're going up right now, though. $40,000. Should buy the market on discount. That'd be awesome. Market slipped a bit there. MC came down, now it's coming back. Still no update on the VIX. Short bonds is going up. Huh. Oh no. Yeah, it's not working. I don't have the colors to do some of the things I want to do here. Gap fills, like why they occur or how they are likely to fill. Just look up gap theory, Ryan. I don't think it's the most accurate. What's my assessment of UWMC? It's doing shitty. They have a huge dividend. Money off it, that's for sure. I need to add that to my watch list though, because I forgot to. Yeah, the Epic Pen's like messing up, but I have other things I'm more concerned with right now than trying fucking pickles. What are you shaving today? I don't think anything. What's the stream delay? I don't have one set, so it's whatever amount of time it takes for me to upload and for you to receive it. A few seconds, I think. What is the guy with the money printer? I think at 2 o'clock. No, not a stressful day. I just have like a lot of shit going on right now. The scanners were lit up this morning. I have day trades going on right now. I've got GameStop doing weird shit. I need some hopium today. I mean, it's far more stable than I would have presumed it to be, given the number of short shares borrowed. Hold on. All right, I'm out of one of the positions now. That was good. What's a Warden's prediction for the end of the week? I have no fucking clue, man. Still below view up. These candles, like they're all like decent volume. We don't have a lot traded so far, but SPY coming down. Teetering, to say the least. I can save the short share draw kicking for later, though. Wall Street bets, boys pumping today. I don't know. CLNE, maybe? I'm not sure what they're pumping. I haven't been on Wall Street bets since, like, yesterday morning. What are the top 50 reasons GME hasn't squeezed yet? The number of shares available drops. That means they have located the borrow and haven't yet shorted it, correct? Then when the shares come back, that's people covering, right? Supposedly. Did you ever read of Crayons' new DD? Crazy stuff. Thoughts? I have. I mean, I saw it. Those are my thoughts. I don't know what to say. It's essentially an explanation of the movie Inside Job with some loose correlation with how that ties into GameStop. It was it was a DD. Most of the information and it's accurate. I mean, I can't fault it, but also like it like there was nothing in that. Like I've seen the movie Inside Job. I read other people's DD. Movie review. I expect to hear a lot about Crayons DD today. I don't know why it blew up so hard. I'm not sure. Maybe there was something in there that I just totally didn't read. It just seemed like an edgy movie review. It's every well written. I mean, that's a low bar, Jordan. But we've been talking about a crash for like weeks. Yeah, that makes more sense. CJ Soccer. Yeah, I think people were just like disappointed in 05. They wanted some other hype thing. That's because the movie Inside Job does an excellent job of explaining those concepts. Big, small, average. It's all relative, John. UFO report or VBV for predicting price action. You can choose either one of those. Probably about as accurate as the other. J. Paul talks at 2. Quick Reddit update, guys. Possibly, yeah. So this makes up non-days and net liquidity for entities are due. That's best to deal with through unimpacted price. I didn't know the U.S. economy was on such a knife edge. I mean, we just went through like a global pandemic where essentially the economy was halted for months. I sometimes I get I'm like very surprised at how uninformed people are, I guess, about like the US financial system. It's always like a shock to me that like people don't know this shit's going on, right? Because I spend all my time doing it. So I just think everyone else does too, I guess. It's like a weird assumption. Drop Pickle Powell. That's probably what Jay Powell said. So is this all so is this all in play from Hedge? Thank you so much for that donation. I don't think this is the all in play. If it is, dear lord, they're fucked. Like if this is all the short shares they borrowed, then they're in some deep shit. But I don't think so. I think if anything, they'll wait for the announcement or start trying to push down now on like a downtrend in the market. Tilly volume went 22, 15, 7, 7 to extract, but I think completed that the money offering in the first 2 days. Yeah, I think so too, J Dubs. If you read the book, Deficit Myth, I haven't. I've heard of it, but I've never read it. Might just stay asleep at the wheel, Joseph. Citadel Luxembourg being dissolved. I haven't read anything about that yet. That's interesting after that Luxembourg shit that went down like a few weeks ago. BlackRock buying up single family homes is somewhat concerning. I mean, I guess they've been doing that since 08 though. Vajota, yeah, we kind of went over the DTCC. I don't know if they're like how effective any of it's gonna be. We'll see. AT&T fits into this all through the Burry tweet. Probably. I don't know. Huh. What's the general opinion on the FTD cycle thesis? I still think it's like very incomplete. Like a bit over this. It's not it's been changed so many times. I mean, I think it's been changed for the better every time. But I still think like it's missing key data that would help support it. I don't think they've used the ball because we're not at a billion volume yet, but they're using them. It looks like they're using them. This is quite a lot of volume here. 150,000. Yeah, that's definitely a chunk of borrowed. Now here's the funny thing though, is like this should not only drive the price further down, right? That's 150,000 shares sold at market. Not only should that drive the price further down, but like it should also pick up stop losses, and it's doing neither of those things, right? Like the fucking next candle's like a $1 difference. Yeah, and that volume's like 60% sold. So 80,000 shares almost. Fucking wasn't even a $2 drop. I mean, I guess. Barely. The fee rate is now 0.73. Yeah, I know. Well, it went down to 0.9 a few days ago, and now it's at 0.73. But it's still listed as hard to borrow. So it's like, it's very interesting. Oh, I know, Kyle. I have an entire DD I wrote about that. Don't forget that by GME diluting another 5 million shares into the pool, right? That also dilutes the short shares. So say they have, I don't know, 300 million shares sold short added to the already existing float. So like, so 371.82 million. And now it's like 5 million more on top of that. They're in such a shitty position. 209. 2-minute cycle, GME, AMC, borrow short, return, and repeat. No. Since 9 a.m., they've only borrowed. They haven't returned shit. This is a dip for ants. This is a really kind of lame dip, right? I mean, it's $10, but for GameStop, like that's not much, right? It hasn't dropped $10 a day in the last 10 sessions. It's dropped $10 a day in the last 5 or 3, technically. Yeah, I know. Only 9K available left. 1.7 million borrowed. No. Fidelity is showing none borrowed since this morning. You know, 1.191 million borrowed from iBorrowDesk. It's time. They're buying time, Sean Boos. The longer they can drag it out, the longer they can stay liquid, right? Iron Porter, it's 1.191 million. The 100,000 shares that you're just counting there were borrowed yesterday. That was separate from the borrow this morning. So this morning it was 1.2 and then it was none for a while before it updated. And then it updated at 500,000 and now it's down to 9,000. It's time for GameStop to say something. Yeah, no shit. The longer they can stay in business, the longer they can keep making money, right? You guys need to stop thinking of hedge funds as like static entities. They might be, maybe they're losing, 2 billion on GameStop today, but they could be making 2 billion somewhere else, right? Like maybe they've made, like 700 million off like an AMC short position. No, I didn't say your name, Sanders. I was talking to Sean Boos. Bows? Sorry. Sean Bows. I like Boofs better. It sounds like Boof. I thought you could only buy one stock at a time. That seems to be like a big sentiment on Super Stonk. And I need to figure out a way to like address that. But like, yeah, but these hedge funds are not static entities. They're not just like only invested in GameStop and that's their only position. Like they can hold a losing position for a long time as long as they're winning everywhere else, right? TFE tweet. Reason for the market dip. Fucking JPOW is gonna open his mouth today. That's if the market's going down. But the market's not really going down much. The market's kind of stable. Let's see what DFV has to say this morning. Good morning, Roaring Kitty. It's Matt Damon from Inside Job. He found a pen. I think he's making. Maybe he read Crayons DT. Fighting with whatever they can. I think he's pointing out that they don't have a lot of fight left, right? Last time over 1 million shares were barred and they shorted, we had trading halts. Yeah, they did. That was in like early April. Not this time. I mean, I think they've used a lot of them already, right? 58% of the volume sold today is, or 58% of the volume today is sold, right? Hold on. I don't know. Here, let me go to 15. What do I need? I need the hour. So 63% of the volume sold today is sold short. Or well, 63% of the volume today is sold. Right? I don't know if that's sold short or not, but I would say they've used them. It's like 600,000 shares used. Right, that lines up. So they got a little less than half left. You think they've continually diluted the float with synthetic shorts? So real, no, not real shorting does nothing. Shorting does nothing. Shorting is short. Like you can like take the daily volume, like go back, take the daily volume, figure out the amount of volume sold short, figure out the change in price, and you will see that like over time they're selling more and more, but the effect on the price is becoming less and less. It's because of inflation. You can only make so many of a thing before you start to devalue the other ones in existence, right? I was trying to tell you to pick up a pen and draw the Terminator pickle. God damn it, fine. Ultimatum drawing Jason Bryan holding a pen. Oh, you guys can't see the pickle. That's right. You guys didn't get to see the creation process. Because I forgot to fucking turn on Epic Pen. Here, hold on. Boom. P800, I need your share your memes and your Rafflecopter. Thanks, JT Acula. The D1000. If DFE tweets out a Terminator meme. Yeah, I guess we'd know. I'm glad you like it, Danorama. I want to do the little crater in the ground, but I don't have enough colors to shade it properly. Technically, everyone missed the drawing. I've spent $20 on worse things. Behind Wendy's fueling some dude's GME habit. Going up. Nice little double bottom bounce. I'm gonna update Reddit quick. Full Fed looking at her. Economy, housing, inflation, hedges. We've talked about this for so long. Consolidation. No, it's not a bull flag. Before anybody asks. Best of before, do you time your drawings with GME rising, or does GME time its rising with your drawings? The latter, multi-bliss, obviously. How would I just know when the stock is going to go up? That's crazy. What programs he used for charts? Alan, WeBull. If you want a link, there's one down in the description. Is it a bull consolidation? God damn you, JFresh. It's not a bull flag. Please don't ban me. Why? That's how you get all the rewards, right? Was there ever a time where you were super anxious with stocks, especially starting out? How did you deal with it? Espresso? I don't think espresso helps anybody be less anxious with stocks. The only thing that makes me anxious with stocks, and it still does a little bit, is when they run hard. Like when I'm making a shitload of money, that will get me a little emotionally imbalanced for a second. But the rest of it, no. I don't know. I don't have any fear of risk, right? Like I've been poor my whole life. I don't give a shit if I lose all the money I have. I'll just be poor again. It's not like it's something I haven't done. Can you just put the Elliott waves on screen so we know what's going on? Sounds like MOASS will wreck you. I mean, I'll be okay. I've learned over time to temper. Like, everyone's got something. Everyone's got one emotion that affects them the most when trading. You're YouTube famous now. You'll never be poor again. I don't know if that's how that works. I'm also definitely not YouTube famous. I'm on YouTube. Paper handed at 212. Currently just lost everything because of Elliott Wave bad predictions. He told me it would go to 80. Lost $30. Elliott Wave BS. uh, shares available? It just means like the shares available to borrow. That's what they're listing. They're saying that they have, like, when iBarrow lists 1.3 million shares, they're saying that they have 1.3 million shares of GME that can be borrowed to be used for a short position. So they're available, right? If someone comes along and chooses to borrow said shares, then they would offer collateral for that position, and then they would be granted the shares, which they can then sell onto the open market with the promise of buying them back at a later date. Yeah, don't forget to drop a like, guys, especially because I drew you a Terminator pickle. Who's Elliot who lied to me about his waves? I want to open up a chain of hair salons called Elliot Waves after MOASS. That's the first thing I'm doing with my money. Elliot waves are kind of like chiropractics, right? Like, people say they work, but all the medical evidence says they don't. Disney ride operator, please. Baby Ree. We're running. My hair down at Elliot Waves. Oh, I'm going to open them all over the country. Salon ownership, very profitable business. Low overhead. It's actually, well, it's only overhead. You don't even need to be there. VWAP waxing salon. All my ailments could be traced back to chiropractic problems. Yeah, Elliott waves are homeopathic medicine. That's why they're so popular on the internet. It's okay, guys. They did their research. This is just Citadels. I saw it when you wrote it the first time, Dan Matthews. It's short hedge fund circle jerk, bro. Get in on it. I've already liked it. I can't like any harder. This isn't working. I've got a concept in my head right now that I'm trying to get down on paper. There we go. And banned. This is the essential technical analysis that points to the short hedge fund circle jerk. We need that emoji. Middle out. Yeah, exactly. Well, see, because you can rehypothecate this, right? Like every time you can just add another short hedge fund. So you put another short hedge fund there, and then you can add a short hedge fund here, and he can just be like, reaching up his little hands. You can just keep adding short hedge funds to this equation. Hang that in the Louvre. Bannon's War Room. Okay. Guys, this is the basis for Elliott wave theory. They're smaller short hedge funds. So you have like well, the mayo goes in the middle. Can you draw Pickle Dog? Well, now we know how the mayo's made, right, guys? Someone write a DD on it. Let's see if we can get 40,000 upvotes and 2,000 awards. Now Citadel knows. Like whatever Citadel intern they have watching this, I'm presuming it's Cornub. Now they know. Cornub, tell your bosses that we figured it out. Fractal jerk. Holding cash during inflation is a bad idea. Uh, yeah, because because it has no growth rate, right? So not ideal. But it's like we have inflation and we're predicting a market crash. So then it's like, what do you put your money in to hedge the inflation, right? You've got to find investment vehicles that not only will survive a market crash or benefit from it, but will also grow at a rate greater than inflation. Interest rate just dropped to 07. What does this mean? I mean, they're they're further incentivizing GME borrowing. GME now the cheapest stock to borrow. I borrow up to 4K. You mean down to 4K? It's down another 5,000. I heard Michael Jackson just bought more shares. Everyone thinks precious metals, but let me tell you, if there's no fucking economy, precious metals are just as worthless as everything else. Finish the interview with Dopey and Dan. Guns also worthless, right? So like, here's my plan. Like, I'm not a gun owner, right? Um, if the fucking economy collapses and society completely blows up and we're living in like some post-apocalyptic wasteland, I'll just go steal a gun from Walmart. I don't need to have one in advance. I don't need like, you guys are way too prepared. If 005 requires brokers to now have the shares, wouldn't this lowering of the bars indicate that they're invest? What? That they're incentivizing borrowing the bottom of the barrel? Yeah, of course they are. I wrote a DD about this weeks ago. They're gonna keep they're gonna keep dropping the borrow rate in order to keep in order to keep a position where shorts are able to continue shorting, right? Until it hits zero, and then it's literally free to short GME. It's almost free already. It's like 0.7% interest on the loan and then 103% collateral, right? Sounds like they might be running out of collateral. I wonder if the rebate went up. I wonder if they're now just paying them. If the rebate's currently at 0.98, which is what it was, then you currently get paid to short GME. Can you explain OBV and why it hasn't dropped with price lately? It has. Okay, let me tell you guys something about graphs. This is like a fun little. We'll have a fun little education session here. If you have like an XY axis graph, hold on, And over here you have 0, 5 million, and 10 million. Right? Things are going to look pretty fucking flat on that scale. Because your x-axis only has 2 fucking values. And they're very, very far apart. So that's why OBV looks flat. OBV is not flat at all. OBV is just shows you the price at which the volume is traded. Look, this is the 1 minute OBV, right? And if we go out to the like weekly, like it looks flat, but it's really not. If you look at the daily, it's less flat, right? Like there's a significant dip all through like March and April up until now when we've started to come back up again. Like if you look at just these last few days, OBV is down. All the OBVDD complete bullshit. Like OBV is not fucking flat. OBV is higher than the price, but that's just because more volume has been traded at higher prices than at lower prices, which is an indication that the stock should go up to the prices that the volume is being traded at because people are willing to buy and sell the stock at that price. Good luck finding ammo. Dan Matthews asking the questions he knows the answers to. Okay, have y'all seen Auto Bits DD? Did AutoBit steal my fucking DD? I will be very pissed if that's the case. I don't think he did. I think he's just fucking around. Whatever, y-axis. Yeah, it's y-axis. Sorry, I said it backwards. Because I'm pissed that I keep having to answer fucking questions about on-balance volume. I think I'm gonna put OBV on the banned words list. Dollars traded, Dan Matthews. Can you tell us about the purple line? I'm going back to VWAP and the 1 minute chart. It's not very zen of you, Pickle. I know. I think they should make the short hedge fund circle jerk the banner for super stock. Do you guys just use VWAP and volume as your trading indicators? For day trading, a lot of the time, yeah. Those are pretty good indicators. Can you OBB AMC in relation to AA's dilution tactics? This is what occurs underneath the short staircase, guys. Double bottom? Where's the other one? Are you referring to this like this as being the divide? That's a very shallow crack for a double bottom. This was a double bottom. This doesn't look like a double bottom. This just looks like the price is falling and buy side like fell short of making an upward movement. What would you do if you had a 250 call expiring this week? I don't know. They're getting to be kind of worthless, aren't they? Ouch. Maybe see if we get like a run up. I don't know. This week or July? It's a good question. Some people have shallow cracks in change. $5 million shares out of the free float is godsend to shorters. That's 40 shares per Reddit super stocker, pretty much nullifying the Reddit effect. They didn't add 8.5 million. Oh, you mean the 3.5 before? I mean that would make me Cody. I don't think you're right. Also, it doesn't matter, right? Because the stock's over 100% short. I understand Walker's sentiment. GameStop really does not play the media card well, or they haven't. Not as well as they could. Yeah, I'm sure news interactions probably is discouraged by the SEC currently. I mean, they're not dealing with an SEC investigation, right? There's an ongoing one involving their stock, but it doesn't have anything to do with the company itself. But that's also kind of like FUD shit that the media spreads incorrectly. I'm doing all right, Noob Van Dan. How you doing, man? But over 100% short isn't fact-based. I mean, it is. They were 140% in January declared, and they didn't cover. And yeah, there's proof in the data that no covering has occurred. Not 140% short position was not covered at any point. No, it just looks like chop. Volume's kind of dropped off. 618, 430 SPY puts jumped 10%. I think I'm reading this chart right. Maybe 430s. 430s are already in the money. Oh, nice. Cody's not new here. He's been in here before. Two share offering got me wondering. I mean, the last share offering, we went up to 350 afterwards, right? So obviously that didn't have an effect. This was a good time, right? They had a positive earnings. Nothing else was going to drop the stock after earnings. So they could guarantee a stable rate for the sale. There's an honest thought that they'll likely start the squeeze. Regulations, lack of liquidity, GME big news, etc. Honestly, like there's so many things that could start the squeeze. It's just a matter of waiting for one or two of them to line up and happen concurrently. All the surrounding strike prices only got 1 to 2% before 30 years. Then the money, which I still don't totally understand. Delta went up? I don't know. Implied volatility might have gone up for that put. 1 mil. What data are you seeing that makes you believe the shorts haven't covered? You could, I mean, the stock's been over 55% shorted every day since January. Well, definitely since the 28th, but I think it was like January 3rd, 4th. Yeah, it would still be forming the handle on the cup and handle. Maybe Monday, Jake. Why hasn't OBV gone down, and why is it because of other? Wasn't paying close attention earlier, but is there an important report being released today about the share offering? I have no idea, Jared. Does that mean 55% more shorts? It means the volume traded every day, more than 60% is sold short. Most days. Some days it's like 56, some days it's 58, but it ranges between about 54 to 68 and a couple times into the 70s% short every single day. Well, the VW short interest stayed the same, right? It's just that the float disappeared. So, I mean, yeah, technically, but... Well, you say that, right? Yeah, like, the only thing that would make sense, is that no one wants to short GME, and so the interest rate's low, right? But yet, we know like 1.1 million, over half of today's volume was borrowed to short already. Except it will not be admitted. There's speculation the SEC investigation is either that or GFV manipulation. So how that plays out. Let's say someone bought. Let's 2 cost me now. So everything's the same. What happens at expiry? What do you mean? And you can sell 100 shares onto the market for 430. You're talking about like exercising the put. I don't know what you're saying. Windmill. Yeah, I mean, in this situation, based on at least what we think Apes own, um, we hold more of the float than Porsche did. Thanks, Loof. Solid pickle today, 8 out of 10. Oh, I think Be Cool. First of all, like GME's been in a very unstable period, right? There was no like official CEO announcement, no chairman of the board. Like all of those things keep whales and institutions with big money from buying into the stock. But I think right now they're just waiting for the share offering information, and that's going to be it. Because they're going to want to buy in before the Russell rebalancing, because that could really drive the price up. The at the money offering hasn't happened. Major shareholders wouldn't agree. They don't have to agree. They already filed the offering. They can just sell. They don't need anybody's permission at that point. Would you? And 600 million, if you're trying to transform a brick and mortar store into an e-commerce contender, is not a lot of money. Maybe. Dan. P005 pickle. It's a Terminator pickle, and making fun of the DTCC. Spend 500 now to be able to sell something I don't have for 43,000 on Friday. Seems like free money. So am I missing something about puts? I think so. Like you don't. Like if you're selling shares, you'd have to short the stock. You'd still have to buy those shares back, right? So if you exercise your put, you're shorting 100 shares. You're not you're not selling it for 43,000, windmill. Windmill trying to figure out how to short the SPY. There's no infinite money glitches, okay? If you think you've discovered an infinite money glitch and options, you're wrong and you're about to get fucked. God damn it. People spam me with DFE tweets from an hour ago. An hour? The ETFs may have to recall the shares. All right, as long as it's a paper trade. If you don't get to sell 100 shares for $430 a share. Does mother load work? I don't know what mother load is. Effective ability to short via ETFs. Yeah, if they already burned through their shares, then the effect has not been that bad. Again, 1.2 million. Get the numbers right, please, guys. 100,000 of the 1.3 available was borrowed last night before close. 1.196 million was borrowed today. Okay, no fighting in the chat, Ryan and Walker. T. Walker has never been overly positive, to be fair. But he's been in here. He's overall bullish. Well, Woodge is just annoying. He clearly hasn't done his research. How is it possible? GameStop hasn't completed selling 5 million. We've been on a massive decrease since they announced. Millions of shares have been sold. Haven't. I mean, it's not that they haven't completed the offering, right? It's just they haven't announced that they've completed the offering. Can you explain why people think that GME is a great hedge against the incoming crash? Because they don't understand what negative beta is. Kirk is Santa. Offering was sold to institutional investors that give short hedge funds more shares available to borrow. Well, I think it gave them at least 1 million shares to borrow. KO in the Haven. Like, if you're synthetically short on GME, millions of shares right now, 1 million actual shares is pretty valuable. So what happens? Someone might borrow a large block of shares just so there's. Yeah, I guess that's happened during like when someone's trying to squeeze shorts. Like if like a long fund is trying to squeeze shorts in a position, they can do that. They'll borrow like a ton of shares and then just buy the stock. Usually on really like small cap companies. Did we have any days in the last couple of months where Jamie was walked down like last Thursday, Friday? No. Offered you a bet for 2K that they haven't done that at the money offering. It's really a green light people think it is. Aren't BlackRock, etc. buying all the shares? You don't know who's buying what. Well, would you? For all you know, BlackRock is buying shares. Also, why would BlackRock or Vanguard buy shares? They have a cost basis of like $5 a share. They're not going to buy shares at 215. Yeah, so like some algos might use GME as a hedge because of the negative beta. Short positions have to cover in the event of a crash. Yeah, the margin calls happen, but it's definitely going to create a lot of distraction. BlackRock would have increased their position announced publicly. Why would BlackRock have increased their position? They don't want to own that much of the company. You do realize that there's certain things that go along with owning larger and larger percentages of a corporation, right? BlackRock owns exactly the amount of GME they want to own. I mean, I'll argue the bull case on GME. I don't give a shit. What's up, Zero Out? You hope. Are any banks not evil? I mean, they're not evil. They're just indifferent. Well, would you discover the truth? Yeah, right? there a real bear case that the community at large is missing? Government intervention would be the biggest one that I could think of. Yeah, it's just chop. Not enough sell pressure to put it down, not enough buy pressure to bring it up. Low volume, nothing happening. Data suggests that 100% of the float is owned, then why wouldn't insider funds who have more data be buying it? No one wants to be responsible for starting the short squeeze. You have to understand this, right? Like, this is really important. No one wants responsibility, right? It's just a big standoff. GameStop doesn't want to be responsible for starting it. Long hedge funds don't want to be responsible for starting it. They want to be involved in it when it starts, but they don't want to be responsible for starting it because they will be scapegoated by the media and the government and other hedge funds. The biggest bear case that gets brought up is that the shorts have covered, but there's no proof in the data of that happening. The stock has continually been shorted in excess of 50% a day since fucking like last August. They had 140% reported short interest in January, and through the entire January run up and the entire month of February, the short interest continued to accrue on the stock. So if anything, they covered some of it on during the gamma squeeze in January and then just doubled back down all through February. So they're either trapped at 5 or at 40, but they're still trapped either way. AMC's Reddit reminds me of ours. Move to the Russell 1000 next Friday is the final date. ANVS. Was that one of mine, Grizzled? Also, doesn't it make anybody suspicious that the media is like, oh, it's they covered. My theory is a bunch did cover. Some unlucky hedges got stuck as their risk teams concluded not to get back in, but keep some in at acceptable risk, thinking it would end, but people didn't sell. Well, the problem is even if some covered, a bunch doubled down, right? Because even at the peak of January squeeze, the stock was sold like 62% short that day. Like on January 28th and February 2nd, the short volume for each of those days exceeded the buy volume. So you can't simultaneously short more than is being buying and cover. Or short more than is being bought and cover. But it's more from a Russell transfer, the small cap fund or the receiving fund. It's a good question. That has more to do with like the inner workings of ETFs, which I'm not super well versed in. It's like a very specific area of expertise. I would imagine the receiving fund. Strike twice as hard. I think the hedge funds didn't anticipate that the price could go to 40 and no one would sell. And then since it ran back up at the end of February, there's been no opportunity to get out. I mean, sometime by like 2018, they were probably already in excess of 100% of the float short. They started doing this in 2015. They're buying treasuries back, which didn't make sense to me. I'm not sure, Jonathan. I didn't see the article. What could be happening here? They're incentivizing borrowing further. If the borrow rate isn't, if the rebate rate has remained the same, choose a name, and the borrow rate is now at 0.7%, then lenders are essentially paying, they're paying 0.2% for people to borrow GME. I've covered why the borrow rate drops. I have several DDs, 2 DDs at least, on the subject. If you guys want to go check out the video DD channel, I have an entire video that explains the borrow rate. You can check that out, or you can check out the accompanying paper due diligence, which is pinned to the top of my Reddit profile. You cover July 16th option chain. What about it, Dan? What do you want me to cover? You want me to cover every aspect of the option chain, or do you just want to know if there's like a gamma ramp? You want to know what to do with your $800 calls? Top 10 institutional insider ownership has 31.8 million shares. Makes sense to switch to a Russell 1000 fund before or after the transfer. I mean, even if GME squeezes, right? Like the ETFs that hold it aren't going to spike that much. So I don't think it really matters. I mean, yeah, I guess you would wait and find out where it's rebalanced, and then you could just do it after. You would have to wait till after the transfer to find out which ETFs are holding the most GME, right? Which could mean that you have to wait like almost a quarter for that information, or however long ETFs have to file their new holdings after the rebalancing. I'm not sure how long it is. Tell me about all 200K under a $10 strike. On the 16th. Puts. 16,000. 16,000. These are just like volatility bets. They're probably someone trying to play the end of the squeeze, Watley. But those have gotten rolled a bunch of times. Those like deep out of the money puts. That's just like a rolling volatility play to pick up money on the end of the squeeze. They're super cheap. So it's not like there's a lot of capital tied up there, right? In those options. 1.1 million shares now on iBorrow? What the fuck? Really? What the hell is going on here? Yeah. They're all back. You can see how they were definitely covered in the last 15 minutes, right? I don't know. It could be another. So, say 5 long funds bought all of the share offering, right? So 5 funds bought 1 million shares each. They can offer those immediately for sale if they're long on the stock or for borrow. So, like, if Fidelity got back in on their position or something like that, they'd have shares to offer. So, if 5 million shares hit the market, expect them to show up in blocks. At least there's a reason for shares popping up out of nowhere right now. Where are these iBorrow shares coming from? I told you, GameStop has definitely almost or completely finished their at the money offering. Earlier, do you think they're expiring to submit internal requirements then returning them? Possibly, would you? Said the good life. Now I want it back. Possibly, Carl. Whoever borrowed them was rejected. That's interesting. I don't know, though. We've seen an awful lot of short volume today already. I should probably update Reddit with that. I think lower borrow percent is because short hedge funds are running out of money. Yeah. Gotta prep for the. What do you have to prep, Cornub? 1.1 million borrowed so far. Yeah. Can you say you've been pickle-nated? Options, calls. J Pow from the Fed is talking about their last 2 days of like closed door meetings. Cornub has to oil up. Fuck, man. Ooh, my AMC puts. Where are my AMC puts? What fucking... Did I tell you what, guys, what account I used to buy those? Shit. Where the fuck are they? It wasn't Robinhood. I don't have... The only thing I have in Robinhood is like $10 worth of Dogecoin. I really do need a spreadsheet. No, it's not. It's not in. It's not in any of my Fidelity accounts. I found them. Ooh, print. Fuck yes. Oh yeah, make daddy that money. Come on, Adam Aaron. Pay me for having to talk about you and see your face. Just slip down below 50 while you're at it. What? How much percent? 380 right now. I picked up like 10,000 off of yesterday's run up, and now my puts are up 389%. What are you gonna sell? I'm waiting to see if it slips 50. If it slips $50, I'll probably hold them. I forgot I had those. Jesus. Dude, check out what's going on with U.S. banks right now. Are they failing? Phew. That's a dip. It's like recovering a little bit, though. It's only $1. What strike? 60. I'll just use this to look at them. Can I add the strike to my watch? God, they're up so much. HYG has been debunked already. Okay. Well, this week's quad witching, Nick. So quad witching's when like all the derivatives markets uh quarterlies expire at the same time. Quarterlies? Yeah. So like futures, commodities, options. Conto butching. I mean, if I was a lender right now, I would be snapping up the at the money offering from GameStop. Because who doesn't want to collect those sweet, sweet, sweet short hedge fund collaterals? HYG was debunked. I don't know. I don't have any HYG. Although I do have puts on J and K, which is similar. Deutsche down 2.676. I mean, Deutsche has always got something going on that's dropping their share price, though. But yeah, all the banks are down. It's because like of the Fed announcement. They think they're gonna announce like inflationary measures. Workhorse Group, Ohio legal challenge. You know what's interesting? Remember I told you guys about Lordstown? Like a couple weeks ago when they were like, oh, Lordstown's dead. And now they have like a new CEO and their stock price is back up and production's right on schedule. C down as much as GME. Offering all the shares to borrow after 005 is passed is also before D chess move. Just a short hedge funds red-handed. Maybe. How does letting them borrow actual shares affect, or how does that catch them out? There's like incentive there, but I have to think about it. At 1.1 million shares conjured. Pickle Terminator, George Reed. And the new international symbol for the short hedge fund circle jerk. Come on, a little more. Dude, just drop. Drop. What's the reversion to mean for this head and shoulders here? Fucking like $10. 4 hour. Down to 25. Oof. That'd be beautiful. Absolutely fucking beautiful. Jesus Christ, I'll make a lot of money. I should have my finger on the buy button for the SPXS. I have two $26 calls and 10 $35 calls for the SPXS right now. They were up yesterday morning. 244, strong chance we fall below 50. I mean, on the 4 hour, it looks like the next resistance is at Cornell. On the 4 hour, it looks like the next like reliable resistance is at $26. I guess, yeah, 44 is okay. Although it's only ever tested once. I mean, shit, 44. I'm fine with 44. But isn't 2026 also the resistance from from January? Yeah, I wouldn't say that's a confirmed support. I'll look for a bounce at 44 though. Can we start doing this again after MOASS? I honestly don't want to do anything else. For those of you guys listening, we're at 213.52, trading just below VWAP. Still very choppy, low volume. Or watch the price action to return the shares. Maybe. But a lot of shares were used today, so they must have... It could have been like a big trading desk, maybe? Like short, buy back in. I know, Medved. So if they used the shares to short here, right? And then they bought back in here. Then the net change was like this. That seems like very little for a, $276 million gamble. Is this the most manipulated day you've seen? VWAP has been straight for an hour now, a decent price action. Hey, VWAP went down, and then it came back up. I'm not embracing Elliott waves. How much impact X shares would have on the price? So like a short liquidity test. Maybe. I mean, I guess it wasn't a net, like a big loss. But this would be the loss, right? Like if any of them were still buying back at this point. So that's the potential gain. I don't know. Weird. Sorry for the cashews, guys. I'm starving, though. My tummy is upset. What's up, Steven? I feel like J-Pow's being held hostage somewhere, and they just let him out every couple weeks to, like, say something. But, like, if they say the wrong thing, whoever's holding him hostage is going to kill his family. So he just tries to say as little as possible. I don't think so, Randy. That's true, Sean. Can you explain the benefits of shorting? Well, sometimes a company is worth far more than what it should be. Yeah, like Tesla. Yeah, my SPXX calls are for this Friday. Were those calls sold or bought? Paradoxical. Let's look. Let me see. Looks like someone bought and sold an equal number of 450 and 454. So somebody sold 57,949 454 calls and bought 57,949 450 calls. So that's like a poor man's covered call. A huge one. So about 5,415 puts. Those are pretty far out of the money. That was probably institutional. It's like the overall SPY sentiment's kind of bearish. Just so you know, when I ask you these questions, it's not to copy you. I just to open charts and look back at them in time and such, seeing how things are. Oh, that's fine, dude. No problem. I don't mind answering. Stating I have a daily limit of 50,000 withdrawal. You should probably just like wire transfer it out. Cash secured puts aren't expensive, right? They're only expensive if they fill. Like you get assigned. Then they're expensive. But yeah, you have to have enough money in the account to... That's why the wheel strategy is not for the capital challenged. Yeah, I'd rather never play Fortnite. Do you think anyone has ever drawn a pickle Terminator in the history of mankind? No. I am the first. Go to Trade Trades if you want your questions. That's not a good place to get questions answered, let me tell you. Jark, yes, but right, like everything, it is compounding. So, you know, maybe it's like 28% a net loss today, right? But like tomorrow it might be 30, and the day after it might be, you know, like 37, and then the day after it's like 40, 48. I just like eventually they can't carry it, right? It gets too heavy. Everything compounds. Any like held position like that, whether it's short or long, will compound, right? So the clock on them keeps speeding up. I'd watch a stream of you not playing Fortnite. Cool. I've played CSGO. I'm not super good at it. What happens after we die? That's it. That's the end of your life. So enjoy it while you're here. We scare away all the big Johnsons. One does not simply play CSGO. Well, paradoxical. The bleed ramps up, right? Imagine the short hedge funds are like somebody with a small cut, but they're also a hemophiliac. They have no clotting factor in their blood. After you die, Citadel resurrects you to work on on their trading floor. You won't. I won't see my great grandma. No, probably not. You won't see anything. You'll be dead. Yeah. They'd have to become infinitely profitable, Jark. Yeah, you've got the right idea. $70,000 deposits per day in the Caymans if you're a POS. What does that make you a POS? What if you just really want to invest in the Cayman Islands? What if you have like a good thesis and you're long the Caymans? Okay, now people are saying Domo is on the side of Apes and tweeted to trust our research. Maybe one of the ones hoping Citadel burns in flames, right? Hedge fund, hedge fund. Fuck if I know. They're very resourceful. Is the first day we're not moving in an intraday U shape? Do you think that signifies anything? No. Maybe the at the money offering's done? The U shape could be caused by the at the money offering, right? Like they offer in the morning, then shorts suppress the price for the rest of the day, like through the midday, and then long side buys to close. That's kind of what we saw the last 4 days. And this morning we saw more downward action in the morning, but I do suspect that this was just a short and then a cover. Maybe a very large one. Or maybe this downward price action this morning was just them trying to prevent a run up, right? Because like if this was just all long side, we'd be through the roof already. So back to the old tactic of short the open. Short the open, cover after people are bored. Yeah, I know, Sean. Get new GT by dentist on Reddit Superstock. Feels kind of bad as investors that all we can do is speculate on what's going on while the big boys make the real moves. It's shitty not having the data. That's what I would want. If I could make one change to the market, it would just be that all the data had to be free and transparent, which isn't going to happen because like financial data is like a multi-billion dollar a year industry. But Orf, was Orf popping off again? Yeah, it's just gonna run. It's already too expensive to buy. Well, it looks like it's bouncing. Might be like a dead cat bounce. Buy pressure is pretty high though. I'd be careful with it. Oh yeah, super profitable holding for them. Buy one share in Power Hour. No, I don't have any money in this account. I mean, I can, but not in this account. So it doesn't really have the same hype effect. Cup and handle probably form. Should we expect a drop well below 200? No, it doesn't have to go below 200. It doesn't, like, the handle doesn't have to reach the bottom of the cup. So if we, like, zoom out and look at it, like, we're definitely in range for that to be for this to be, like, the end of the handle. Right? So, like, comes down and then comes back up. It was fine, given that that's the ceiling. Like, we could hit 200 before bouncing for the cup and handle to complete, but I don't think that's necessary. Like, there seems to be more than enough support at above 200. KO. Donathon, thank you so much for becoming a Cornishon. I appreciate the membership. I read your write-up on Zillionaires last night. It was lengthy. Ah. Oh, that felt so weird. I got like a fly in my headset. Fucking flies in here. UK time? What's UK? 7 hours ahead of Eastern? So 9 p.m. Or is it five? It's 5 hours. 7 p.m. It was a girthy write up. Am I thinking of like France? France is 7 hours ahead. Yeah, Jark. Well, the guitarist and inventor Les Paul, and the fly and the microphone on the radio show. No, I haven't. Ibiza. Yeah, absolutely, dude. It was an interesting read, if nothing else. It's greedy in ways you can't imagine. Oh, that's a lot of what I spend my time trying to do is imagine the incentive. Ibiza. That's not how they say it in Spain. Germany 7 hours. Italy 7. Okay, yeah, Italy 7. France is 6. It's been a long time since I've been to Europe. Oh, that's kind of funny. You mean Thane? Hey, Han Banan. Chat's slow today. You guys need to pick it up. I can't believe I'm not getting a million questions about fucking whatever the. Is no one writing any DDs today? Is that what's happening? The DD train has stopped. The analysis of fucking the movie Inside Job has stopped all other DD. What's my favorite hot dog? I don't like. So I don't eat. I try to not eat the ones with nitrates. I don't really eat a lot of hot dogs. I will say though, like just a cold day in New York City, there's something I don't know, something like tied to my childhood about like going and get a hot dog in the park. It's got to be below freezing out, and the hot dog has to be steaming hot. But there's something about that that makes me feel things. TDs are pointless. Chat will speed up if you give Terminator a minigun that shoots cornichons. Everyone was watching inside job clips on YouTube. You can just watch the whole movie on YouTube. Can't bother reading DD anymore. Can you apply Elliott waves to AMC and explain how it relates to OBV? I could. But why would I waste my time doing that? I feel like all the DD that's been coming out lately isn't even like, it's not even there to like offer a new perspective or just like, or they found some like new thesis on GameStop. It's all just like trying to one up the DD before it and it's like hype factor. It's like, I need to out hype like Adobit's like House of Cards Part 9 or whatever. And then, like, so the next DD is just like equally inflammatory and full of nonsense. I was like, I'm going to take these facts and then at the end of it, I'm going to make a nonsense statement about GME and how this ties into it. And Super Stocks is going to be like, oh my God, look at this. This is the craziest shit I've seen all year. Until the next DD comes out. I think that's why I'm not as popular on Superstock, because I'm not playing the hype game properly. Maybe I need to do a DD about the short hedge fund circle jerk. T plus 35 DD is out. Oh, Hand Banan, you know better. Anything interesting happened? Can you summarize the past 3 hours? We went down and then we went up, and now we're going kind of sideways. Is MOASS going to happen? Absolutely. Are you going to wait for it? That's a challenge. Correlation of the movie Memento and GME. The MOASS button? That was good fun. That was just good fun. Yeah, I'm Pickle Guy. I feel like a lot of them don't even know what the fuck I do on the subreddit. They just hear my name a lot, but they've never read any like technical analysis DDs or like any of the stuff I've written. The phrase "God tier DD" makes me want to hurl. Do a DD about your floor this week. Dude, I got so much fucking hate mail when I was like, okay, the floor of the stock is 157 after the last sale. I was like, that's it. Like, this is going to be like our solid, like, resistance line for the coming weeks, right? And everyone was like, are you trying to get us to sell at 157? And I was like, no, I'm just saying the stock's not going to go below that number. And so many people were confused by it and thought I was like trying to shill a floor below 10 million. And I'm like, do you guys not understand what floor means? And since then, I've had to change my own definition of floor so as not to incite that rage again. Expecting anything dramatic post JPOW? Maybe. See what he says, right? Like, that guy literally has the power to come out and be like, guys, sell everything. And, like, that's what's gonna happen. This is your opportunity to create a new and unseen trading method, like Elliott waves, but circled squared theory. Most CDI red I measured against. Head gasket replacement. It's hard. It takes like 24 hours. You got to take the block off the engine, pull out the old head gasket, clean it, seal in the new one. You got to drain the oil. It's a big pain in the ass. It's like an all-day job. Like if you're doing it yourself, and on some cars you need like a cherry picker so you can pull the engine out completely. Much easier to just take it to a mechanic. More expensive, but much easier. Oh yeah, a lot of people that have come in here have just left because I'm just like off on tangents about like some movie or different actors that I don't want playing me in the GME documentary. People actually don't know the difference between floor and ceiling. Here's one for you. Did you know that unless you have the paper share in your hand, you actually don't own the stock or actually just a beneficial owner? Yeah, I did. I did know that. I also knew about Seed and Co. before fucking, you know, Adabit wrote about it. You know why? Because they were there. They've existed for a long time. A lot of people were aware of their existence and what their job is and what service they provide to the market. Like fucking Dr. Tabby Cat when she wrote her book 20 years ago. Is there any DD that isn't yours that you do like? You could go watch DFV's YouTube videos. Those are pretty good. How will you play you in the GME movie? I'll just play me. I'd much rather be the person who plays me in the GME movie than let someone else do it. I'm far too complex of a character for anybody to capture appropriately. That's not how you pronounce seed, according to Dr. T. CD. Oh, they should have spelled that way then. Market hipster. I knew about it before it was cool. It's still not fucking cool. Let me tell you. Freshly permed Zach Galifianakis. Absolutely. I would let him play this role in a heartbeat. I like him quite a lot. Okay, simple question. How come we say more buying than selling drives price up? Doesn't every buy imply a sell? You said something about bid ask last time, but can you please elaborate? It's because of the bid ask spread, right? So, like, if more selling has occurred, then the bid goes down, right? And if more buying occurs, then the ask goes up. But so, like, if there's been a lot of selling, then the space between these is larger, right? And so when someone buys, the price goes up more than if they sell, the price goes down less. So like if you buy a share of GME right now, the price goes to 214.81. If you sell a share, the price goes to 214.56. right? And then if that ask is sold, then like, okay, so now the spread is 214.50, 214.16 to 214.75. So if you buy a share, it goes up. If you sell a share, it goes down. But eventually, like, the ask gets like removed, like further removed from the bid price, right? And so if they're buying, the price goes up more than if you sell. Like, it won't go down as much. Trying to make that sound simple, but I feel like maybe I just made it more complicated. Elliot, House of Cards 4 before out of it. That'd be funny. Your favorite airport and why? That's a good question. Uh, San Diego's pretty dope. It's very easy to get through. I hate Phoenix because it's hot. You generally have to go outside at some point, and everything's just massive. Like, it's like a mile walk from terminal to terminal, and you always have like 8 minutes. It's like being in high school. Like, all right, 1 mile, 8 minutes, go. I thought we agreed to Ryan Reynolds. Only if Ryan Reynolds is willing to gain like 30 pounds. On a 2008 Ford Edge, you have to take the engine out from underneath the car to replace the head gasket. Awesome. It's fucking American know-how for you. Some great engineering right there. Pickle would have to release House of Glass because House of Cards people would downvote to oblivion. Or 1 million back in stock. Yeah, we know about the share return. Thanks, Tig. Ooh, yay. Goodbye, Spy. My calls are up, guys. Someone leaked some bad news before the meeting. Yeah, I think so, Willie. I would allow myself to be depicted in the GME movie only vis-a-vis my pickle drawings. Single individual wildly cause massive price fluctuations by buying a wildly optimistic ask. I mean, that's kind of what happens in pre-market when you see those like crazy spikes. They're on very low volume. I think he said he was working on Citadel Has No Clothes Part 2. Who gives... I don't give a shit. Yeah, Long Beach Airport's super awesome, too. San Diego and Long Beach are both really easy. The other nice thing about them is like when you land at them, like there's no like 30-minute wait to get off the plane. I fucking hate that part. Or I've got to like wait for people to like pull their luggage down and make sure all their shit's there. You're just standing there like with your backpack. I don't take luggage anywhere. What do you think about Dave Lauer saying DTC 005 has changed nothing, has no teeth whatsoever? He's probably right. I mean, because if it had teeth, we wouldn't be trading at 214.34 today, would we? I'm sure Superstock is very close to calling Dave Lauer a shill. Why only 700 upvotes? I don't know. Drop a like, guys. Thanks for amazing knowledge drops and the amusing banter between them. Thank you for the donation, Acer. I appreciate that. Yeah, we know, Cutter. Thanks for letting us know, man. The first rule of Long Beach Airport is you don't tell people. It's not like it's easy to find flights in and out of Long Beach. Will you not be printing out Citadel Has No Clothes Part 2 to read on the edge of a mountain or while out camping? Santa Barbara, Santa Rosa. Supersonic. They've already called him a shill? Really? They went and got him and brought him into this shit, and they're calling him a shill now? What the fuck? I'm not a shill. No one's overtly called me a shill yet. I haven't gotten banned from the sub. The problem with the reckless confirmation bias is like as people learn more and more, they'll start to see the holes and all that shit, right? And then they're going to lose confidence in the thesis of the stock. So like if you write fucking nonsense DD just to hype people up, that's like pure speculation, and then they find out that it was nonsense, they're not going to feel as confident in their position. This is why the only DD that is needed is that the shorts haven't covered. Which there also seems to be a lack of knowledge in. Maybe I should write a DD about that. If so, then the price should go back up, right? Well, the idea behind shorting is that other factors also bring the price down, right? But yeah, that's how it works. Borrow, short, buy, return. Well, Josh Konecki, statistically, it's not a few. It's over 50%. I want to try shilling. Who do I talk to? Daniel Taylor. He went on with Matt Kors. Ugh. Please write that DD. I feel like I've included that information in my previous. You know, my two most successful DDs were just me re-releasing DDs that I had written into my weekly posts as independent DDs. So like the exit strategy, like I edited some things and like added another section, but like that was already there. I already had written that, but it didn't blow up until I released it as its like own DD, which I think is hysterical. Borrowing fee down to 0.6%. Guys, when it hits 0.0, lenders will pay you to short GameStop. You can make 1%. It's like a savings account. No one like industry side is going to have the same like thought process as people on Superstonk. Like all of their emotion towards this is going to be much more reined in. Write a DD estimating the approximate estimation of SI. Reusing DDs sounds shilly. Well, I made them like they were part of like they were a big section of other DDs, but I made them as a standalone. My weeklies need catchier names because I wanted them like all to be in one place. So I just rewrote them essentially for ease of reference because like it was a bitch for like mostly because it was like a bitch for Secure to like link everybody to like 6 different due diligences. Probably has a book coming out soon who just wants people to know who the fuck he is. Probably. Just to let groups self-sabotage. Oh yeah, I think one of the biggest dangers to this entire thing is like the internal monologue of apes a lot of times. Like it gets so like hostile and dramatic and like divided sometimes. That's why boredom's such a great tool. They short to infinity and shorting is free. How do we win? Well, it's not free, right? It's just the lenders trying to get all of the short hedge funds collateral, like cash collateral. And then once they have it all, they're just going to cut off lending. Like clearly, Jeffries is just done lending out shares to shorters. They're like, okay, that's it. And they're just going to like sit on that until they cover like the shares they've already lent them. Then they're just going to sit on all that collateral they've collected. Tie in Elliott waves. I think that the exit TDs is more concise and easy to digest. Yeah. That was the point, Alethea. I'm just using my free shares from Robinhood. Can you go on a rant? I'm bored. I've been on a rant this whole time, Jonathan. Use a scanner, JR. What the heck? It's just been filed, but I think it's no. I think it's like it's not just filed; it's in effect as of its filing. KS. Although that aspect is still slightly unclear. Can you go on a better rant? Do you like to sing? When I'm by myself, yeah. I'll sing a song. Can you tell me where you've been wrong in the GME saga? Oh, the last 4 days, where I assumed, well, mostly yesterday when I assumed they would be announcing the sale. That's it. If the market tanks, we'll probably, like, GME will probably go down. Your charting analysis of Bitcoin has been super helpful. Rant about Godpill. Is he still around? A lot of pickle themed rompers with vegetable pouches for men. Sure. The FTD cycle is T plus 21 cycle just a theory. I believe yesterday was supposed to be another T plus 21 day, but I'm not sure if that even happened or not. I think it's a theory. Yeah, you can't be right 100% of the time. Yeah, the volume's pretty horrendous. Smox Fox, welcome back. The market's not tanking yet. Not as hard as I'd like. Technically, yeah. You only need to be right 51% of the time. I already have SPXX calls. I have 12 of them. Thoughts on AMC? It's a shit company with an even shittier CEO. I really do wish it would complete this second Head and Shoulders. I guess it kind of did. GME is going to be going back down to 210. Looks like. I'm going to update Reddit real quick, guys. Remember, if you can, drop a like and subscribe if you want to see more of my super awesome content. And if you guys want to donate, there is a coffee link down below. You can support the channel there. That's always greatly appreciated. Is there anything else? That's it. That's the whole speech. My SPXX calls are for Friday. I mean, I'll just buy more on Monday if it doesn't crash. They're pretty cheap. Thanks, Ham Banan. Do you anticipate the share bar loaned total swing increase going forward? Typically, we saw 100K swings, but now we're seeing a million. What? We just saw a million once, right? We saw it go from a million to nothing, and then back to a million. But it's like, that's just because there used to be 100,000 shares available, now there's a million shares available. I'm not in Corsair. You think it's gonna crash? Do you think I should wait to buy more? What? GME? I don't think GME's gonna crash. Not right now. I have no reason to believe that. Yeah, we could bounce off 212. I know we don't want to go below 200. Below 200 is very bad. We don't, Bob Lewis. Are we watching Powell? I don't want to watch Powell talk. We'll just wait till he's done talking and then, like, look at the news. Oh, look at this. 5 things you may not know about Federal Reserve Chair Jerome Powell. He graduated with a bachelor's degree from Princeton in 1975 and a law degree from Georgetown in 79. It's good to know that he did know math. Ooh, Powell is said to enjoy riding a bike, and in the past, rode his bike 8 miles from home to the Federal Reserve office. Powell also enjoys playing golf and guitar. He's also been known to repeat people's sentences backwards to them. He sounds like such a fun dude to hang out with. Bands. Gives a shit. Yeah, I know. Imagine running into that guy at a party. I mean, Powell's had bipartisan support as Fed chair. And you know what that tells me? That tells me that both parties think he's incompetent enough to do the job. He's the most incompetent. That's what that says. You think he's gonna give your stream a shout out? That'd be dope. Imagine if he just has my stream open. He's getting his financial advice from in here. He's like, well, I think the market's due for a crash. The Fed speaking at 2, Sarah. 2:30. J Pow praise you up. Powell likes the perm. Powell gets on television, he has a perm. What do we do then, guys? Buy more GME, I guess. Thanks, Hambadan. See ya. So to clarify, DTCC has no teeth. Well, they're not going to bite their own ass, right, BW Lions? I don't know why, after all of this, that there's this still this sentiment that, like, the government or, like, self-regulatory bodies want to benefit us in some way. Kitty tweet. Could check that out. Is it from the Terminator? It's not. It's from Vice. Or was it? What's the name of that show? What's they do with the Vice? I can't remember the name of the show. I've watched it too. I've watched all of that show. Veep. That's it. Sonic the Hedgehog. This is fucking boring. I want my stocks to move. You. CX did not too good. Oh, well. Oh yes, a lovely another lovely J Pow red day. The fucking guy, like just the news of him opening his mouth tanks the market. Windmill Willie, if you're trusting any news pushed at you after being in this channel for the weeks you've been here, think about that. It's called fly on the wall. Like, do you really think that's a credible source of information? Can you tell me where the post went? Who knows? Yeah, probably deleted with no correction. Who the fuck is J-Pow? He is the chairman of the Federal Reserve. Your problem now with news sources, and that I would love to get some news, but I don't know where to get reliable ones. Probably the best way to do that is to just do your own research. That's why I'm asking. It sounds like bullshit, Windmill Willie. Market Watch can predict the future. Covered calls, the only option strat us plebs have access to which can use shares as collateral. Covered calls are the only options that use shares as collateral. But yeah, pretty much for retail. JPO something bad. SPXX is tanking. SPX is tanking? No, he hasn't said anything yet. This is just the action on the news that he's going to say something. He's said nothing. okay, guys, you know this Cristiano Ronaldo thing is a perfect example of where you have to look for motive, right? You need to be looking for what incentive does Ronaldo have to be. Hold on, I need to fix my Epic pen so I can speak right things. Shilling KFC. Downplaying Coca-Cola, right? And why? Why is this happening? Because KFC is owned by Pepsi. Whose mind's blown right now? So now we know who's paying Ronaldo's bills. Fucking Pepsi. He's like a big soccer dude. It's like, don't drink Coke, go to KFC where they have Pepsi. Right? Yeah, also Taco Bell. Double bottom. Pickle just did House of Cards 6. I thought everyone knew who he was. Or he's an athlete and he promoted water? No. Absolutely not. If there's one thing Ronaldo loves, it's fucking money. And Pepsi was probably like, listen, you get rid of those Coke bottles on that table or we're going to pull your fucking contract. And his fucking agents over there at the end of the table, like, get rid of those Coke bottles. They're in the shot. Get rid of them. What's Ronaldo shilling? KFC? He's an athlete, but he sells fucking KFC to people? That's like the most unhealthy food you can buy. Chicken Littles. I mean, Chicken Littles are legit, but like, they're not good for you. Partially Italian. Of course, you know about soccer. It's like LeBron shilling spray. Yeah, exactly. Sean. Money is always the motive, but who's making the money? That's the question you need to ask. Anytime you look at anything, do they make chicken nuggets from baby chickens? I think they make all chicken from slightly immature hormone raised chickens. Yeah, but Pepsi makes Coke. No, Pepsi makes Pepsi Cola, not Coke. Very different. Where do I get this shill money? You just need people to listen to the things you say, and then the shill money will follow. Is this a Coke channel now? No, but if Coca-Cola wants it to be, it could be. I could use that Coca-Cola money to buy more GameStop. And if I get enough of it, then I could convince Coca-Cola and GameStop to partner, get Ryan Cohen to tweet a Coke bottle. Boom, I'm rich. Then I could write a DD about how Coke is going to partner, like merge with GameStop to sell soft drinks to gamers slash Reddit people. I'm trying to plan this out. Hold on. You should hydrate with a refreshing Dasani. So then I'll package all that up, and then I'll go to Pepsi and be like, hey, this is about to go down if you guys don't buy me out. I've puts on Citigroup. Thoughts? Good luck. God tier DD posted on Superstunk. Who owns Hot Pockets? It's a good question. I forget. Is it Kraft Heinz? No. Nestle? I think Nestle owns Hot Pockets. Oh, there you go. If you support Hot Pockets, you support evil. Kirk's response to any and all plays that he isn't involved in. Good luck. I mean, it's not dissimilar than my SPXS bet, right? Like if he's short Citigroup and I'm short the SPY, like if things go tits up, they're both gonna crash. Would you rather have $2 million untraceable cash or mad cow disease? $2 million, please. It's technically true. You do supply the hot yourself. They're as bad as everyone makes them out. You know who has the hottest pocket? VWAP. I wish we could cross it. Speaking 230. I'm just gonna buy like water rights, like clean water rights. Stocks trending on Wall Street bets. It's all over the place. It's disgusting. Wall Street bets has always been a disgusting, toxic shithole. That's what was so great about it. If anything, it's now far more tame. SPXS or XPXY? Which are you in? SPXS. It's right on the screen, too. Next to my head. Or this side. Right there. See those? No, it's in an hour and 30 minutes. 1 hour, 30 minutes. I own Coke, Keurig, Dr. Pepper stock. Yes, tickle your position like that. Some of my calls are actually up. Other regret is I can now buy 10 shares for what I paid for 8. I don't like the pickle finger. We're supposed to be talking about it 2:30. Who knows? I think they're just like, they're probably writing it still. Tickling the options makes them grow faster. Just like. The report comes out at 2, he speaks at 2:30. So the market will probably tank it to you, and then he'll be like, no, guys, it's okay. Stop doing that. I'm Jerome Powell, and unemployment and inflation are the same as they've always been. We do not, at this time, see any need to put in some measures. You guys should come hang out with me at some parties. 1.1 million on iBarra, so they used more than 100K, Pat. They probably used them all and then bought them back. $500 end of day. That's what I should do. I should buy some calls on the SPY also. I don't want any of those exercised. Shouldn't have to go the money. I mean, we can have as many bottoms as we want. Ben Crow rules. Do you think he repeats what people say back to him in reverse all sing song while playing the guitar? Probably. I hope so. I hope he comes out and he's just like, guys, interest rates are now 30%. Have a good day. Maybe if we just keep saying like 30% interest in YouTube, like the algorithm will pick it up and we can cause the market crash all on our own. Just drop $1 million in GME. I don't have $1 million. $300%. Oh, then I need to go to a Walmart if that happens. Change the stream title. If we start talking about expensive things like Lambos and jets. Maybe. I'm down to try. Do you watch Cover the Fed talking live? If you guys really want me to, but it's gonna be super fucking boring. Lambo. I bought my girl a Prada bag the other day. It was nice. Yeah, diamond rings. Let's guys, if we can hit 100,000 subscribers by the end of the day, I'm gonna yeet some Gucci at y'all. Is that enough? Have we talked enough about it for the algorithm? Just do it for us. Stream it. Oh God. Health insurance. Is yeeted Gucci a good thing? Probably. Might get a Cadillac SUV. I read somewhere interest rates are going to 30%. 30% interest? I don't know about 30% interest, but 30% interest sounds like a lot of interest. 30% interest could mean, you know, the US economy just completely collapsing in on itself as hyperinflation takes over. 30% interest. Did you two hear about 30% interest? Who hasn't heard about 30% interest? JPOW, 30% interest, Fed. Okay, I've done my work. It's up to you guys now. Who else is short the spine today? We just need to get it 30% interest trending on Twitter, right? And then it's all over. How fucking stupid is that? I heard that Jay Powell setting the federal interest rate at 30. Somebody's gonna come in here and like go liquidate their 401k because of us. I have 30% interest in this conversation. This channel is 30% Dan's. That's probably pretty accurate. I took a pill in Ibiza to show Avicii I was cool. Guys, I'm already getting calls from CNBC. Stop talking about 30% interest. Now everyone, now we all just have to start Googling 30% interest JPOW. VIX is rising. It just chatter about 30%. Oh my God. I don't want that. You said it, not us. Who's writing the 30% interest DD right now? That's the question. Yeah, the abbreviation of super stonk should probably not be used regularly. Looks like the Count from Sesame Street. Yeah, Jimmy. Let's talk about 30% interest. Super S, I guess. There's no good way to spin that. Guys, why am I hearing about 30% interest? Sus? I just googled 30% interest Jerome Powell, but couldn't find anything relevant. 88%. That was my favorite 30% interest stream. Trending on Twitter, 30% interest. Sus pickle. Pickles are never sus. Hard to write out supersonic. No. Yeah, this is a triple bottom. But do we cross VWAP? That's the real question. I should update Reddit. Let them know about 30% interest. I'll just be like, would it be cool if Jerome Powell announced 30% interest? Cardi 30% VWAP. This is why we can't get any viewers in here, guys. And this is why I can't have nice things. Because we start doing this shit and people go in there and like come in here and then they go to other YouTube channels and like they just keep saying 30% over and over and over again as it applies to various things. I want him to come out and say 30% interest is coming, boys. Best invest in a stock with high negative beta. Buckle up. I'm not a cat. And then walk off the stage. We need 30% of a pickle. Yeah, but paid over 30 years. Mic drop. Probably about 30% of the chat saying 30% interest. Pickle is saying the SI. I know the SI is at least 230%. What if Ryan Cohen here's a good incentive. What if Ryan Cohen is waiting to trigger MOASS? So he's gonna have $2 billion, right? He's waiting to trigger MOASS to tank Amazon. And buy them out. Him and BlackRock are going to buy out Amazon after they tank the market with GameStop. See, that's some next level shit. Because, like, not only are they all of a sudden going to have trillions of dollars, right? But companies like Amazon and Apple are going to be fucking worthless. So they just reverse Uno them. GameStop becomes the world's largest company. And then we can live in like kind of a cyberpunk society where Ryan Cohen rules all from his seat of power as our corporate overlord. Dude, I can make up tinfoil hat conspiracies all day, all of which make more sense. At least that makes sense, right? Like, that's a hell of a strategy move. Yeah, tank Amazon while Bezos is in space and then buy him out. GameStop ushers an era of technocrats. We're already in that era. I think Bezos is trying to fake his own death. I think that's why he's going into outer space. Is that J-Pow in the background? Is the kind of DD I come here for? Well, at least it's logical though, right? Like you could definitely create a thesis around how that would be possible. Like we have to figure out Ryan Cohen's net worth, the estimated net worth of GameStop peak MOASS, and then Amazon's current valuation minus the percentage decline in the market, right? So if GameStop goes up and Amazon goes down, I don't see any reason that that's not possible. What if Ryan Cohen's actually the best at capitalism? Please do that. No, it'll blow up too big, and then I'll have to answer questions about it for months. I want my DD to be right in the middle, where like people intelligent enough to read it hang around, and then other people ignore it. What about Dr. Tabby Cat? Thesis. Somebody drink. House of Cards Part 420. DFE getting impatient. You should come hang out in here. We've got shit going on. How did you know this would happen? I mean, like that's like all the apes plans, right? Like we all plan to like buy up a bunch of the market after it crashes while GME skyrockets. And why wouldn't that be the plan of the one guy capable of making it happen? %30 of the time it works every time. What if we hang around but are also not intelligent? That's fine. You just grow wrinkles. I think Bezos got a perm at one point. And this is where he is now. His hair salon didn't run out of the necessary chemicals. Why not? Proof. Exactly. It's almost like he doesn't care that he's bald. Because he's the richest man on earth. If I was the richest man on earth, I would be the worst combination. I would be fat, mustached, and bald. Because he gives a shit. You're rich. You can look however you want. Look at Adam Aaron. Adam Aaron doesn't care about how he looks. And he's not even that rich. Couldn't break 212. Head back to 223. That sounds about right. This is literally a daily stockholder meeting with occasional TA and educational content. I give out tons of educational content. Elon definitely cared. Elon's got small PP energy. He's like that little kid that's like in the middle of like someone's living room, and they're like, "Look at this thing I figured out. Look what I can do. Why is nobody paying attention? Everybody, look at the thing I can do." That's Elon. But his wife's cucked him for $1 billion. It's more than that. Educational. Things are learned in here sometimes. Do people worship Elon? What if RC is the Rain Man? I mean, he's the chairman of the board for GameStop. He's got to be smarter than me, right? He had to have figured this out already. I'm a fan of Elon because he seems like a man of action. He's a man of talk. Very little action. Elon pumped and dumped crypto like a boss. Because he's allowed to. I'm suspect of Elon based on how ugly his girlfriend is. That's not nice. It's not her fault. What if Franco is getting advice from Godville? Oh, then we're all doomed. He's disrupted the car and space industry. What are you even talking about? He's talked a lot about disrupting shit, but he hasn't really disrupted anything. You'll see. Time will tell. Also, he didn't do shit. He just bought companies that were disrupting things. Yeah, it's not like Elon like invented the electric car or created the rockets for SpaceX. He made a flamethrower for the average. He made an average flamethrower too. I had a friend who bought one. I don't know why they haven't announced it yet. Undercover. Maybe tonight? Maybe tomorrow night? Maybe Friday after close. He didn't put together the right people, even. They were already together. He simply bought it. Yeah, he's not. I mean, he's a good front man. That's what he's good at. He's good at talking shit up. He didn't even invent PayPal. Michael Burry is back. Are we doomed? I hope so. Please pronounce Elon's child's name. I don't even know his child's name. Yeah, the like one of the founders of Tesla had to sue him in order to still be named as one of the founders. I mean, look at like Ray Kroc, right? I think him and Musk are very similar. Got some deep rooted stuff against Elon. I just don't think he's like anybody's fucking hero. That's all. He's good at what he does. He makes a lot of money, but he's not trying to save the little guy or make the world a better place. That's just fucking PR and bullshit. Spy's taking a little poo-poo. Can the shorts be shorting to increase average short position, say from 40 to 200? And if they get below that, they can cover? No, because they still have to cover the ones from 40, right? Like they could bring down their average cost, but that doesn't change where the position was started. Right? And so if all their short shares were at 200 and they started covering now, the price would still, like, we would still have a short squeeze. Greatest speculative bubble of all time in all things is a slight on MOASS. It might be. Who knows? Burry's predicts shit all the time. That way when something happens, he's right. T plus 35 DD from dentist. I haven't seen it. Why would I have any thoughts on it, JC? I just don't want him aiming his FUD at GME. Well, he backed GME for a little bit until the people who own his company told him to stop. I've only ever seen someone else eat a KFC bowl, and they said it was delicious. Don't make Gherkin become a reads a DD for money channel like somebody else. If I did that, though, like, I thought about this for a while. I was like, I should have a channel where I just, like, sort super stonk by new and, like, disprove DD over and over and over again. Just, like, why it's wrong and complete bullshit. But that would de-incentivize people to write DD. And even though I think there's a lot of, like, crap floating around out there, every once in a while, someone does write a good one. They're not always the most upvoted or the most popular, but there is an advantage to having 400,000 people with their brains focused on one topic, right? You could call the channel Shill Vision. Oh, lazy weasel. What are some of your favorite DDs? Well, they can be found on my Reddit profile, WM. DFVs were pretty good. One of the newer T plus DDs wasn't bad. I forget who wrote it. Still missing information. You really aren't as smart and special as you think. Oh, Alban. I know that. But that's because I think I'm far smarter and more special than I am. Home Depot Hanks DDs are funny. Yeah, I don't have any problem with Crayons like information in his DD, which is a huge step up from how I usually feel about most DDs. Fallacies of level 2. No, Palantir, see that is wrong. And I'm gonna address that. DD, even if it's wrong, keeps the like morale up temporarily, right? But then when people realize it's wrong, it brings morale down far more than it ever brought it up in the first place. So incorrect DD is a net negative over time. Yes, there are thousands and thousands of July 16th $16 puts happening with GME right now. I saw this in a post, wondering your thoughts. It's probably just somebody trying to play the downside of a short squeeze. Because they're super cheap to buy. So they're playing the volatility off like the short squeeze completing. I know for a fact that if you go to any other investment based subreddit and see what they say, like people who do this as a profession or a job or, you know, even like a hobby, and see what they think about like incorrect DDs, you realize it really does just make us look like we don't know what we're talking about. And so even though the supporting thesis for GME is correct, DDs like that have a negative effect on what people think about GameStop, first of all. And then also a negative effect on the community itself when people realize that they're incorrect. Yeah, but it's only a matter of time before they start reaching further and further afield to try to tie more things into GME, where like it'll start to become like the DD will become overinflated, right? Due diligence inflation. Like we'll have so much DD that it'll have all been said, and that anything else coming in is just going to start to be super speculative. And so like it's best to just stick to the facts and the core thesis. How big do you think the first forced liquidation Long Johnson will be? Very big. Like if you were a short hedge fund and you really wanted to like fuck with super stonk, you would just write DDs, right? You would write DDs that are kind of like conspiracy but make sense. Because that's the best way to like tear the community apart, is to get them off of the original thesis and onto like other bullshit, because then people forget what they were invested in the first place. Yeah, I know about the shares to borrow. Like the Amazon DD. I mean, that was, yeah, I mean, obviously, like, the Amazon DD is, sarcasm. I'm not actually going to write that. But at least, it has a logical point, right? And so it's, like, easy enough to believe it's possible. Speculative DD with merit can be built upon. Maybe, right? And like that's why it's bad to shut it down. It's a very like thin line. Yeah, most of the relevant things were said by DFV in 2020. Just stopped interacting and people realize. It's one of the many ways that boredom wins. I don't know. Jay Barnes. Lost my mag. Yeah, I mean maybe, but then like they get in there and like if they know about the stock markets at all, there's a lot of like if I just came in to GameStop now and I went to Superstonk, it would be very hard for me to find uh proof of thesis, like a proof of the hypothesis, right? How many times should we put Powell's statement through Google Translate? But the mod's sticky to live stream. What do you mean the good stuff gets buried? I mean, a lot of the good stuff doesn't even get upvoted a lot because it's not like either people don't understand it or it's not like confirmation bias confirming. Like you could explain all of GameStop and why it's a good investment and why it's a good buy in one due diligence. And that would be the only due diligence that would be needed, right? Because like you don't need any of this other shit to know that the stock is going to squeeze. And yeah, I know there's people that are like, "Oh, I'm in it to like fuck the hedgies," but like they're just not going to get like fucked in the ways that you're imagining. Or I lost my house in '08 and this is my payback. And it's just not. You're just like you're 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 going to make money off of like their funds, but they're still gonna walk away rich and not in jail. I really don't think anyone's like going. Maybe like one dude will go to jail. It's probably not gonna be Kenneth Griffin. Can you check out dentist's new T plus? No, I don't. I don't read people's DD on stream. I'll check it out later. If you want to message, link me on Discord, and I'll read it later today, and I'll have thoughts on it tomorrow. Today's beauty tips have already been given out. What about the AMC? Don't get me started on that shit. We'll have a few scapegoats to punish for all this. Yeah, but not many, right? Not themselves. Kenny G's not even gonna fucking get house arrest. He's gonna do the CEO thing and be like, oh, I didn't realize this was going on in my own company. That's crazy. That's the whole point of an LLC, is that it protects the owners and like well, it protects the owners from liability. Glacier Capital CEO confirmed scapegoat? Probably. Maybe that's why they shut down Citadel Luxembourg or whatever somebody was saying earlier today. I think we need a DD on AMC. Wasn't Dodd-Frank supposed to go? Dodd-Frank was supposed to do a lot of things that it didn't do. More protections with C Corp. Yeah. The point is that the corporation itself is liable for the corporation's actions, not the agents of that corporation. Adam Aaron DD is juicy. Most of them were traded January 7th. That's interesting. So they weren't super far out of the money when they were bought. So they're just like leaped short positions, Moon Boy. Can you write the core thesis, DD? That sounds like a lot of time. Maybe. And arrive here today to become an investor in the future of GameStop. What proof? Ugh. So like they could be writing all these T plus DDs, and like something might be happening on those days, but they don't know if it's actually them covering FTDs, right? DD on why MOASS will happen and why should ignore crazy crayon DD. I don't know, maybe it needs written. I've thought about that a lot, but it's risky. It's very risky. People do not like, in my experience, people do not like being told what they believe isn't true. Or irrelevant. Irrelevant might be worse than telling them it's a lie. Who's it risky for, like, realistically speaking? Me? Watch this channel for perps and pickles. When did I analyze any DD, Skittlebrow? I'm still a permed pickle. Nothing's changed. Much like the thesis on GameStop. Boom. Tied that in perfectly. Any new news that GME is moving? No, it's just going up. There's no reason for it to be going up, but it is. On pretty low, unspectacular volume. Spy just had a big drop. Yeah, Spy's coming down. It's nice. I like it. As we approach 230, I'd imagine it will come down more. Possibly. But what if I can just like continue writing my cool, calm, logic-based due diligence, and over time, more and more people come in here instead of me just trying to drop a bomb on everybody's hopes and dreams. Tortoise and the hares. Tortoise and the hare, my friends. Tortoise and the hare. Slow and steady wins the race. Where can we go to hear the JPOW announcement as early as possible? I think they have a YouTube channel. Sam Jones, I gotta disagree, man. I think most people do not understand the math. I think statistically, most people don't understand the math. I get questions in here every day of like, how do you know the shorts haven't covered? Like every day, 2 to 3 times a day, sometimes from the same people, to be fair. Fast and steady beats slow and steady. Why? Looks like we got time. Can you please stream during the ass? I'm already getting anxiety. Oh, hang out here more, maybe it'll go away. Did you hear something about 30% interest? wish the company would come out and announce anything, right? How do you know the short's happening? A lot of it is. Like, Elliott waves are just intentional. Like, the only reason they're popular, even though they've been wrong every single fucking day, right? Like, wrong and then wrong again and wrong again, and then it got changed. Like, the previous one got changed, that was wrong again, and it's been going on for months. The only reason it's popular is people don't understand it. They're like, what? Fibonacci? That sounds crazy. Someone said that in a math class that I didn't take. You're streaming JPal? I don't want to stream Fine, I'll stream JPal. If it makes you all happy, I'll look at his boring face and listen to him just say boring things that'll probably lose me money on my calls. Imagine if he just doesn't show up. That'd be amazing. What is the opening bell? Well, the Elliott wave thing pisses me off because it makes me look bad too, right? Like, Elliott wave makes anybody else look at doing TA look bad because, like, someone sees it and they're like, oh, this is fucking wrong, and then they're like, all TA is wrong. And even though we currently are in the middle of an event that is throwing the TA off, we have a likely scenario of what that event is, but ultimately, until GME announces it, we don't know. And I'm fine with that. I can sit back and be like, okay, like, TA is going to be kind of fucking screwy this week, right? But going and changing your Elliott wave every day just makes it look like we're selling bullshit, right? I know. I mean, the current thing people have told me when I was like, oh, Elliott wave doesn't work on this. Like people have messaged me on Reddit, be like, oh, what do you think of this Elliott wave post? I'm like, Elliott wave doesn't really have a very high success rate on GameStop. It hasn't for months. Um, and their response is just like, well, he got closer to the floor than you did, but he was still wrong. It doesn't matter who was closer. That's not the contest. The contest is nailing the dip on the dot, and you can't, because we had no fucking clue 24 hours before that GME was going to sell 5 million shares. So, I mean, like, it's not the Elliott Waves guy's fault he was wrong. It's not my fault if I was wrong, right? Like, if stock action had continued, and like no sale had been announced and nothing eventful had happened in the shareholders meeting, then the pattern that we were in would have continued, guaranteed. I had that pattern was built over 21 trading days. You know, almost a quarter of the time that we've been watching this stock, that pattern has been building. It was very accurate, but then a fundamental change occurred. And that kind of destroys that thesis for the time being. Now, if we get an announcement, yeah, I think we can move back into that pattern, maybe at a different range, but a similar pattern all the same. Some TA is forecasting. Most of it is pattern recognition. Not all TA is designed to predict what will happen in the future. It's a pen. It's a Bic pen in the Pickles hand. Yeah, I mean, like, my TA can tell you within a range of probability what will happen. Are you shilling Bic now? I don't know. Maybe it's paper, mate. Does that make you feel better? Forward-looking TAs, all forecasting is imprecise. Well, there's not a lot of, like, forward-looking TA. I mean, if it was like... One sec, guys. What's behind the curtain? Reality intrudes. You're getting more and more accurate. GME announced the share offering. Now we have to build a new thesis. Yeah, I know. That's exactly what happened. So yeah, now we need time to build a new thesis. We need to see what is going to happen now that GME has released 5 million shares onto the market. Spy big crash? Ooh. Like this. All right, I'm back. It's not MOASS time. Spy did jump off the cliff, though. Shape how? That's a lot of selling. You know what's weird is these calls aren't going up. Statement is out on the Fed website. 30% interest. Someone link me the. No, never mind. You guys can't. Statement. This was 17 minutes ago. Rooters. I'm not seeing anything. FederalReserve.gov. Okay, Federal. Change GDP. Wait, what? Oh shit, 3% inflation. Four percent inflation. The fuck? Wait, they're saying the GDP is gonna drop by 4.7? What? Three percent's really bad. I'm saying this doesn't look good at all. Maybe I'm reading the chart wrong. Change unemployment rate up, PCE inflation. Jesus Christ. It looks like the GDP is falling off a cliff. The projected GDP is also falling off a cliff. Unemployment's up, and inflation's up. Looks bad. Looks real bad. I don't know what else to say. It doesn't look like he's making good announcements. Let's see what he says. But SPY's coming back a little bit. GME running. So that's nice. I'm gonna let Powell explain it, I think. We'll just do the stream. Because I don't, like, it's like a ton of data, and I don't have time to go through it all. And I don't want to misspeak on any points. So we'll see what Jay Powell has to say, because that's ultimately what's going to matter, not the report, but what he says. J&K puts worth nothing in WeBull. Yeah, I know. I mean, they're worth $60, but I'm down 90 on them. J&K didn't fall hard enough off a cliff. But we'll see. This could just be like a short rally. Is this one Algos by GME? Possibly. You need to explain more about what you're saying. I'm going to let Jay Pow. I mean, it's like 18 pages of data. I'm not going to go through it on stream. It looks like GDP is down, inflation is up, and unemployment is up, which are all negatives. So none of it looks very good. But I can't go into all the data. Hard stop, sorry. There was a lot of fucking, like, background noise going on, and I couldn't concentrate. We might be a spy stream. Spy is important. It might be a spy stream for the rest of the day. America's been shorted. Yeah, this is like a very bad earnings report. Not good for who? I mean, I guess people who own stocks. Saying they're revising up GDP for 2021. Options, millionaire to spy. Looks like we're in quite a pickle here. Fucking VIX is about to blast off. Spy not coming back to VWAP. Maybe it is? I don't know. This doesn't look super stable. Sweden feels quite safe right now. Yeah, GME is my bank account too, so I'm not super worried about the banks. Let me check Citi. Citigroup. Citigroup bounced back pretty hard. Still bouncing. Interesting. Spy's coming down there. Let me check QQQ. Whoa. What did I just do? QQQ coming down. Markets. Dow. Dow down 2 points. SPY down 2.5. NASDAQ down 75 points. All right. Let's do a market crash. Down. SPY is the biggest ETF, I think. SPY down, fix up. Those are good indicators, I thought. I mean, If you're currently holding 10 worthless SPXX options, they are. Yeah, we could put the JPOW speech on stream. Whoever do to HF just hit the rock button on the SPY. That's possible. I don't know. That was a big sell-off. How does margin impact GME if drop? We'll see. That was already a big drop. We went from like 424 to 419 pretty quick. Fun stuff. Sideways trading guy misses every day. I know, right? No. I think SPY gonna hit 400 today. I mean, if the SPY hits 400 today, I'll be a very rich man. SPY down, VIX up. That's the way we like to fuck. US dollar went way up. Japan went way up. Could we get a flash crash? That'd be awesome. Holy shit, I'd make so much money. I'm sitting here trying to think about all the money I'd make. My $26 calls that I bought like an hour ago are already up like 100%. I'm scared of checking Super Stonk. I feel like I should say something over there, but I don't know what to say. Like, what do I say? I don't know what's going to happen to GME if like the market crashes, like intraday. I have no idea. I have 12 SPXS calls total, but I also have 6 calls on JNK, which is like short the bond market. Did we do this? Is this our fault? Because we kept saying 30%? What SPY strikes are you drooling over? All of them. This is amazing. No, we'll see. Should we be worried? No, not yet. Am I a hedge fund yet? I mean, if you're losing a shitload of money right now, you might be a hedge fund. This does not look good. It's like it's a real short rally. It didn't even get up to resistance. This is gonna hit a new low. Guys, the short hedge fund circle jerk has crashed the market. Was the 30% thing's a joke? Okay, everybody, no more saying 30% because it is a joke, and there's people with like 401ks and shit right now who are probably very worried. I'm serious. J-Pow hasn't said anything yet. We have 13 minutes. I'm gonna get a coffee real quick. I think. Can I get a coffee? Yeah, that's not funny, some dude. Not cool, man. Fix up to 18. I know. June 18th, 26. They're out of the money. How are yours in the money? I bought them at a lower IV, probably. Mine are up quite a lot. They're up like 180%. Yours should be near to up. I mean, the SPXX is almost at $26. I bought mine during a market uptrend. You bought yours during a downtrend, probably. You'll be like in the money soon if this keeps up. I don't know what the VIX is. It's the market futures volatility index. Scoring head. Yeah, I think I need to get coffee, but I need to bring my phone with me because I need to keep an eye on this. Okay, yeah, I'll be right back, guys. I'll just get coffee. I'll try to make it really quick. All right. I'm coming back now, guys. I'm gonna try to pull up the Fed Reserve live.
So making sure that there's
Okay. Market coverage. That's fucking Yahoo Finance. I need Fed Reserve live. There we go. 2:30. Oh my god. Sorry about that. Okay. Can we get another perm? No. No. Spy's looking bad, yeah. Alright, so I'm gonna mute that till it comes on. I don't know if the guys in Discord can hear it, though. There's like a bunch of people in the Discord. How do I stream my desktop audio to there? Settings. You were hidden. Oh, sorry. I forgot to turn my camera on. There you go. Sorry, guys. Does anybody know how to share my stream audio with the Discord? Everything might crash. We might just get like a severe correction. I don't know why the borrow rate on GME is dropping. Your cam is muted. Your chart is still on. What? No, I'm not. Everything's fine. You drop the borrowed shares of borrow rate question for the rest of today. I have a DD on it. It's in the video DD channel if you have any questions about the borrow rate and how it's being used to incentivize shorting GameStop. I have a thesis. It is just a thesis, but is it possible GME starts taking? I don't think much, right? Unless Apes sell. Yeah. GME might get pretty volatile, but I don't think it's going to tank. TTT jumped really hard. Okay, Spy coming back. Still looks weak though. Jimmy should tank with the market. It might not. It's rehypothecating his subscriber count. SPXX leaps in the money red. It's just leaps in the money. Lost money on Theta. Use virtual audio device, but use a different OS than you. Oh. Yeah, I don't know what to do for the people listening in as far as the JPOW meeting goes. I guess I'll just like try to narrate it. Made a deal with GME to save the U.S. economy. Yeah, okay. If you guys want, just look up FOMC press conference live, and you should be able to find that on YouTube if you want to listen in while we listen in to the Fed conversation, which is going live in about a minute. Let me pull this out and get that on screen for everybody here. Boom. Nope, that's the Federal Reserve. No, that's the chat. That's also, oh, there we go. Okay, and then resize that so we can still see stocks. Cool. All right. We want perm. Thank you so much for the donations, guys. OBV is flat and Elliott wave is the way. I did not see these come through, but thank you. All right, so if we hit a new low on this, that's going to be pretty bad. Volume on the SPY skyrocketing. GME kind of not doing a lot. This could be the ultimate. Oh, here we go.
Good afternoon. At the Federal Reserve, we are
Oh, he looks
committed
super
to
anxious.
the monetary policy goals that Congress has given us: maximum employment and price stability. Today, the Federal Open Market Committee kept interest rates near zero and maintained our asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. Widespread vaccinations, along with unprecedented fiscal policy actions, are also providing strong support to the recovery. Indicators of economic activity and employment have continued to strengthen, and real GDP this year appears to be on track to post its fastest rate of increase in decades. Much of this rapid growth reflects the continued bounce back in activity from depressed levels. The sectors most adversely affected by the pandemic remain weak, but have shown improvement. Household spending is rising at a rapid pace, boosted by the ongoing reopening of the economy, fiscal support,
Boosted by
and accommodative
unemployment.
financial conditions. The housing sector is strong, and business investment is increasing at a solid pace. In some industries, near-term supply constraints are restraining activity. Forecasts from FOMC participants for economic growth this year have been revised up since our March summary of economic projections. Even so, the recovery is incomplete, and risks to the economic outlook remain. As with overall economic activity, conditions in the labor market have continued to improve, although the pace of improvement has been uneven. Employment rose 419,000 per month on average in April and May, with the leisure and hospitality sector continuing to post notable gains. Employment in this sector and the economy as a whole remains well below pre-pandemic levels. The unemployment rate remained elevated in May at 5.8%, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic, such as caregiving needs, ongoing fears of the virus, and unemployment insurance payments, appear to be weighing on employment growth. These factors should wane in coming months against a backdrop of rising vaccinations, leading to more rapid gains in employment. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate standing at 4.5% at the end of this year and declining to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. Inflation has increased
Powell hasn't said
notably in
anything
recent months.
interesting yet.
The 12-month change in PCE prices was 3.6% in April and will likely remain elevated in coming months before moderating. Part of the increase reflects the very low readings from early in the pandemic falling out of the calculation, as well as the pass-through of past increases in oil prices to consumer energy prices. Beyond these effects, we are also seeing upward pressure on prices from the rebound in spending as the economy continues to reopen, particularly as supply bottlenecks have limited how quickly production in some sectors can respond in the near term. These bottleneck effects have been larger than anticipated, and FOMC participants have revised up their projections for inflation, notably for this year. As these transitory supply effects abate, inflation is expected to drop back toward our longer-run goal, and the median inflation projection falls from 3.4% this year to 2.1% next year and 2.2% in 2023. The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, shifts in demand can be large and rapid, and bottlenecks, hiring difficulties, and other constraints could continue to limit how quickly supply can adjust, raising the possibility that inflation could
Jimmy is
turn out to be
going
higher
up.
and more persistent than we expect.
Spy, choppy.
Our new framework for monetary policy emphasizes the importance of having well-anchored inflation expectations, both to foster price stability and to enhance our ability to promote our broad-based and inclusive maximum employment goal.
I mean, he said a lot of nothing, but he's also saying that unemployment is up and people aren't participating in the job market. And he's also saying that they have now.
If we saw signs that the path of inflation or longer-term inflation expectations
2%
were moving
inflation
materially
goal.
And persistently beyond levels consistent with our goal,
VIX choppy
we'd
also.
be prepared to adjust the stance of monetary policy.
Now they're saying they're
The
prepared to
pandemic
hedge
continues
against
to
more
pose risks to
inflation.
the economic outlook. Progress on vaccinations has limited the spread of COVID-19 and will likely continue to reduce the effects of the public health crisis on the economy. However, the pace of vaccinations has slowed, and new strains of the virus remain a risk. Continued progress on vaccinations will support a return to more normal economic conditions. The Fed's policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As the committee reiterated in today's policy statement, with inflation having run persistently below 2%, we will aim to achieve inflation moderately above 2% for some time so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. As is evident in the SEP, many participants forecast that these favorable economic conditions will be met somewhat sooner than previously projected. The median projection for the appropriate level of the federal funds rate now lies above the effective lower bound in 2023. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be.
He's the catalyst we never saw coming.
More important than any forecast is the fact that whenever liftoff comes, policy will remain highly accommodative. Reaching the conditions for liftoff will mainly signal that the recovery is strong and no longer requires holding rates near zero. In addition, we are continuing to increase our holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. At our meeting that concluded earlier today, the committee had a discussion on the progress made toward our goals since the committee adopted its asset purchase guidance last December. While reaching the standard of substantial further progress is still a ways off, participants expect that progress will continue. In coming meetings, the committee will continue to assess the economy's progress toward our goals. As we have said, we will provide advance notice before announcing any decision to make changes to our purchases. On a final note, we made a technical adjustment today to the Federal Reserve's administered rates. The IOER and overnight RRP rates were adjusted upward by 5 basis points in order to keep the federal funds rate well within the target range and to support smooth functioning in money markets.
What the fuck?
This technical adjustment has no bearing on the appropriate path for the federal funds rate or stance of monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public
drop.
mission.
Drop.
We at the Fed will do everything we can to support the economy for as long as it takes to complete the
RRP.
recovery. Thank you. I look forward to your questions.
Well, they raised repo rates.
First, we'll go to Rachel Siegel, The Washington Post.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering if you can walk us through.
Oh, they're doing a
expectations you
Q&A?
have, specifically when it comes to the labor market going into 2023.
Oh, by the way, just
And I'm
5
curious
basis
about people
points.
who may have
Mic
left the labor
drop.
market,
Walks
who would like
out.
to come back, or who may face issues with childcare. Perhaps they've retired early. Any barriers that you see keeping people from the labor market as you consider full employment going into 2023? Thank you.
Thank you. So I would say if you look at the labor market and you look at the demand for workers and the level of job creation and think ahead, I think it's clear, and I am confident that we are on a path to a very strong labor market, a labor market that shows low unemployment, high participation, rising wages for people across the spectrum. I mean, I think that's shown in our projections. It's shown in outside projections. And if you look through the current time frame and think 1 and 2 years out, we're going to be looking at a very, very strong labor market. In terms of exactly what that means, we'll have to see how things evolve. I think we learned during the course of the last very long expansion, the longest in our history, that labor supply during a long expansion can exceed expectations, can move above its estimated trend. And I have no reason to think that won't happen again.
Yeah, it's
At the
0.005,
same
not
time,
5%.
We have seen, in terms of participation, we've seen a significant number of people retire. And so we don't actually know exactly what labor force participation will be as we go forward, but I would tend to look at it and think that it can return to high levels, although it may take some time to do that. But overall, this is going to be a very strong labor market. In terms of the near term, you ask as well. So we see a few things that seem likely to be holding back labor supply. There are very large amounts of job openings, and there are a very large number of people who are unemployed, and the pace of filling those jobs somehow feels slower than it might be. So I'd point to a number of things. The first of which is just that most of the act of sort of going back to one's old job, that's kind of already happened. So this is a question of people finding a new job. And that's just a process that takes longer. There may be something of a speed limit on it. You've got to find a job where your skills match what the employer wants. It's got to be in the right area. There's just a lot that goes into the function of finding a job. So that's sort of a natural thing. In addition, I would say that we look at, for example, a significant number of people still say that they're concerned about going back to work in jobs where there's a lot of public facing because of COVID. So that's clearly holding back some people, and that should diminish as vaccinations move ahead. There's also the question of childcare. Many are engaged in caretaking, and as schools reopen and childcare daycare centers open in the fall, or not in the fall, then we should see that supporting labor force participation by caretakers. Finally, unemployment insurance for something like 15 million people will either end or be diminished as we move through the summer and into the fall by the end of September. And I'd like some that may also encourage some to go back in and take jobs. So you would think that would add to an increase in job creation as well. So you put all those together, I would expect that we would see strong job creation building up over the summer and going into the fall. I will also say, though, the last thing I'll say is this is an extraordinarily unusual time, and we really don't have a template or
we don't know what the fuck we're doing, is what he's saying.
Any experience of a situation like this. And so I think we have to be humble about our ability to understand the data. It's not a time to try to reach hard conclusions about the labor market.
Nothing
about
impressive
inflation,
yet.
about the path of policy.
Low
We
key.
need to see more data. We need to be a little bit patient. And I do think, though, that we'll be seeing some things coming up in coming months that will inform our thinking.
Thank you. Paul Kiernan.
Buying SPY puts
Hi,
higher
Chairman
than
Powell.
those
Thanks for the
there.
question. The committee's medium forecast on inflation seems to assume a pretty tame outlook for the rest of the year. As you know, the 3-month annualized rate for the past 3 months was, I think, 8.4% in the CPI. And I'm just wondering sort of how much longer we can sustain those kinds of rates before you.
I feel like this
risk.
guy is
Thanks.
wearing like a shirt
So,
and a jacket, but no
inflation
pants.
has come in above expectations over the last few months. But if you look behind the headline numbers, you'll see that the incoming data are consistent with the view that the prices that are driving that higher inflation are from categories that are being directly affected by the recovery from the pandemic and the reopening of the economy. So, for example, the experience with lumber prices is illustrative of this. The thought is that prices like that have moved up really quickly because of the shortages and bottlenecks and the like, they should stop going up, and at some point they in some cases should actually go down. And we did see that in the case of lumber. Another example where we haven't seen that yet is prices for used cars, which accounted for more than a third of the total increase in core inflation. Used car prices are going up because of sort of a perfect storm of very strong demand and limited supply. It's going up at just an amazing annual rate. But we do think that it makes sense that that would stop and that, in fact, it would reverse over time. So we think we'll be seeing some of that. When will we be seeing it?
Sold
We're
on
not
my
sure.
pants to buy more GME.
That narrative still seems quite likely to prove correct, though. Although, as I pointed out at the last press conference, the timing of that is pretty uncertain, and so are the effects in the near term. But over time, it
VIX
seems
at
likely that
18
these
right now,
very
up
specific things that are
5%.
driving up inflation will be temporary. And we'll be on. We're going to be looking. We'll be looking at the monthly pricing data. I'll also say that
I
the labor
agree.
market is going to be important both for the maximum employment goal, but also for inflation. And we'll be looking at that. And as I mentioned, we expect, and I expect, that we'll see increases in supply over coming months as the factors that we believe have been suppressing supply abate, wane, move down.
How down do you think
So,
SPY could fall by
I
Friday?
can't give you an exact number or an exact time, but I would say that we do expect inflation to move down. If you look at
we could see the SPY.
if you look at the
if we get a
forecast for
correction out of this,
2021 and
we could see it drop to, like,
2022 and 2023 among my
415.
colleagues on the Federal Open Market
If it
Committee,
drops
you'll see
below
that people do
415,
expect
it's gonna-
inflation to move down meaningfully
it's gonna drop
toward our
hard.
goal. And I think the full range of inflation projections for 2023, it falls between 2 and 2.3%, which is consistent with our goals.
Thank you. Now we'll go to Elon Mui at CNBC.
I'm long on used cars.
Hi, thank you, Chair Powell, for doing this. My question for you is that you mentioned that your colleagues did have a discussion about the progress that you're making toward your goals in order to consider tapering your asset purchases. In that discussion, you said that you haven't made substantial progress yet, but that you expect to continue to make progress. In that discussion, did you guys talk about a timeline for when you expect to see that progress be made and when you
Lots
might
of market
consider,
orders on
starting to
GME right
reduce these
now.
purchases?
Right. So I expect that we'll.
So
be
it's
able to say
interesting what's
more
going on with GME right
as
now.
we see more data.
It seems like
So
when the
there's not a
market's
lot of
dropping,
light I can shed on that.
it's
But you
being
can
bought,
think of this meeting that we had as the talking about.
and when the market's
if you
going
like.
up, nothing's
And I
happening.
now suggest that we retire that term, which has served its purpose well, I think. So committee participants were of the view that since we adopted that guidance in December, the economy has clearly made progress, although we are still a ways from our goal of substantial further progress. Participants expect continued progress ahead toward that objective, and assuming that is the case, it will be appropriate to consider announcing a plan for reducing our asset purchases at a future meeting. So at coming
We gotta see
meetings,
if
the
this
committee
falls
will
off a
continue
cliff
to assess
again.
the economy's progress toward our goals, and will give advance notice before announcing any decision. The timing, of course, Elon, will depend on the pace of that progress and not on any calendar.
Thank you. Now we'll go to Chris Rugaber, AP.
Everyone understands GME as a hedge against the market drop.
Right, thank you. Well, you mentioned, let me ask about inflation expectations. You said they were, I think you mentioned in your opening statement that you saw them as within target. Um, does that mean that some of the shorter term measures we've seen out there, such as the New York Federal Reserve's 3-year outlook, which jumped a bit, should those sort of be dismissed? And are we only looking at longer term inflation expectations? And would you describe those as still well anchored at this point? And on a related note, would the Fed consider publishing its index of common inflation expectations on a monthly basis? Thank you.
So we do tend to look at the longer term inflation expectations because that's really, we think, what matters for inflation. The shorter term ones do tend to move around based on, for example, gasoline prices. So you'll see if gasoline prices were to spike, you'll see the shorter term inflation expectation measures, particularly the surveys, move up. And that's maybe not a good signal for future inflation if gas happens to spike and then go back down again. Yes, I think if you look at the broad range of long-term inflation expectations, they've moved up. They moved down at the beginning of the pandemic, sort of further exacerbating concerns that we might find ourselves where, for example, the ECB and the Bank of Japan have been, where you have expectations and inflation itself sliding down, and you have a really hard time stopping that process once it begins. So that was a concern.
GME still at
17, longer-term inflation expectations move back up to a range. It's a range that's consistent with what our objectives are. These are not precise measures, and they contain risk premiums of various kinds, and that's why we look at a broad range of them and tend to look at the movement of that broad range of indicators, which are from surveys of economists, surveys of the public, and also market-based. It's a wide index, as I'm sure you know. We look at that and we see them back in the range where they were, and they by the way, they've been broadly higher than that, somewhat modestly higher than that, not so many years ago at a time when inflation was still anchored and at around 2% or maybe even a little bit below. So the answer is yes, I think they are anchored and they're at a good place right now. It's gratifying to see them having moved up off of their pandemic lows. And as you know, it's fundamental in our framework, our new framework.
That'd be awesome, Victor.
To assure that longer-term inflation expectations are anchored at a place that is consistent with our goal. We think that's an important reason. If inflation expectations are not anchored at a place that's consistent with your goal, it's not clear why you would expect to hit your goal over the longer term. So it's important.
Okay, now we'll go to James Politi with the FT.
Chair Powell. Hi, thanks, Chair Powell. Your economic projections today forecast 7% growth in 2022, unemployment for 4.5%, and core inflation of 3%. If those conditions are achieved by the end of the year, would that constitute substantial further progress in your mind? And kind of more broadly, when you look at the sort of median forecast for interest rates in 2023 showing not one but two interest rate increases at the time, is this kind of, can you describe the sort of tone of the discussion in the committee, and are we really moving towards sort of a post-pandemic stance? Is there greater confidence that the recovery will be a full recovery sooner than expected?
On your first question, the judgment of when we have arrived at substantial further progress is one that the committee will make, and it would not be appropriate for me to lay out particular numbers that do or do not qualify. That is the process that we're beginning now. At the next meeting, we will begin meeting by meeting to assess that progress and talk about what we think we're seeing, and just do all of the things that you do to sort of clarify your thinking around the process.
He really doesn't seem like he knows what he's talking about at all.
To adjust the pace and composition of asset purchases. In terms of the two hikes, so let me say a couple things. First of all, not for the first time about the dot plot. These are, of course, individual projections. They're not a committee forecast. They're not a plan. And we did not actually have a discussion of whether liftoff is appropriate at any particular year, because discussing liftoff now would be highly premature. It wouldn't make any sense. In our
He has a law degree.
transcripts from 5 years ago, you'll see that sometimes people mention their rate path in their interventions. Often they don't. And the last thing to say is,
Thank you, Han.
the dots are not a great forecaster of future rate moves, and that's not because it's just because it's so highly uncertain. There is no great forecaster of future dots. So
I
dots
know.
to be taken with a big grain of salt. However, so let me talk about this meeting. The committee spelled out, as you know, in our FOMC statements, the conditions that it expects to see before an adjustment in the target range is made. And it's outcome-based, it's not time-based, and as I mentioned, it's labor market conditions consistent with maximum employment, inflation at 2%, and on track to exceed 2%. And the projections, they give some sense of how participants see the economy evolving in their most likely case. And honestly, the main message I would take away from the SEP...
There is a
that
committee report. It's available on their website.
Many participants are more comfortable that the economic conditions in the committee's forward guidance will be met somewhat sooner than previously anticipated. And that would be a welcome development. If such outcomes materialize, it means the economy will have made faster progress toward our goals. So the other thing I'll say is rate increases are really not at all the focus of the committee.
Still
The
no
focus of the committee
takers.
is the current state of the economy, but in terms of our tools, it's about asset purchases. That's what we're thinking about. Liftoff is well into the future. The conditions for liftoff.
Stop
we're
saying
very far from
liftoff.
maximum
Jesus
employment, for
Christ.
example. It's a consideration for the future. So the near-term thing is really, the real near-term discussion that will begin is really about the path of asset purchases. And as I mentioned, we had a discussion about that today and expect to, at future meetings, continue to think about our progress.
Thank you. We'll go to Nancy Marshall-Genzer from Marketplace.
Continuing, Chair Powell, continuing in that vein, when you're ready, how will you go about signaling the start of tapering when you do decide to do that?
So our intention for this process is that it will be orderly, methodical, and transparent. And
Every
I
time
can
he
just
says
tell you,
lift off,
we,
GME goes up.
We see real value in communicating well in advance what our thinking is, and we'll try to be clear. And as I mentioned, we'll give advance notice before announcing a decision to taper. And so all I can say is that we think it's important. We think where the balance sheet's concerned, a lot of notice, as much transparency as we can give, and as far in advance as we can, to give people a chance to adjust their expectations. And we expect to be in that business until we reach substantial further progress, and then have a decision. Again, I have nothing further on time. It wouldn't be appropriate to say we're going to have to see more data.
Lift off is all over Daily Thread.
Substantial further progress, we think, but we're making progress.
So you can't say generally how far in advance you would signal.
Again, as we approach that goal, we'll provide as much clarity as we can.
Great. Thank you. Going to Craig Torres at Bloomberg.
Craig Torres at Bloomberg. If I were a businessman looking at the forecast today, I would ask how and when the Fed seeks to achieve an average of 2% inflation. In other words, does the FOMC have a look-back period, or does it plan to suppress inflation in outer years? Because over the next 3 years, you're going to be above inflation. So what is your look-back period? Does the committee have one? And if not, why not? And if they don't, why isn't this just flexible inflation targeting?
I mean, the
without an average in a range of
XPXS
2
calls
to
are just
2.25%?
still worthless.
Thanks.
So as part of our year-and-a-half-long process, the review that we did and came out with at the end of that
Dude,
with
it's too pompous.
with the new Statement on Longer-Run Goals and Monetary Policy Strategy, we looked carefully at the idea. We've all read all of the literature around different formulas for makeup and things like that. And we concluded, and I strongly agree that it's not wise to wed yourself to a particular formulation of that. So we did adopt a discretionary. There's an element of discretion in it. It says that we will seek inflation that runs moderately above 2% for some time, and it's meant to create a broad sense that we want inflation to average 2% over time, and that under the old formula, under the old framework, what was happening was 2% was a ceiling because all of the errors were below. You were always getting back to 2%, so you were bouncing back and forth between 1.5 and 2, and we wanted them to be centered around 2. So that's the approach that we're taking. You're right. It's not a formulaic approach. We were clear on that when we announced the framework. Was there another part of your question, Craig?
Burry's saying that if businesses and consumers anticipate more inflation, then the inflation will follow.
Thank you. Now we'll go to Michael Derby.
Thanks for taking my question. So I wanted to ask you about the reverse repo usage that we've seen lately. I was curious if you are at all concerned about the level of money flowing into the reverse repo facility, and do you believe
that means there's a floor?
Changes in the Fed's rate control toolkit today will have any impact on that? And then in a related question, do you think that Fed asset purchases are taking too many safe assets out of the market right now and creating maybe some dislocations in the money markets?
So on the facility, we think it's doing its job. We think it's doing the reverse repo facility is doing what it's supposed to do, which is to provide a floor under money market rates and keep the federal funds rate well within its range. So we're not concerned with it. It's doing. You have an unusual situation where the Treasury General account is shrinking and bill supply is shrinking, and so there's downward pressure. We're buying assets. There's downward pressure on short-term rates, and that facility is doing what we think it's supposed to do. Sorry, your second question was again?
Yeah, I mean, the change in the rate control toolkit, will that have any impact on, do you think that will reduce the amount of money coming into reverse repos? Will that have any impact on money market conditions that, beyond the Fed funds rate setting?
It could have some impact. I think we'll have to see empirically, but it's designed to keep the federal funds rate within the range, and I do think it could have some effect on broader money market conditions below, as it relates to the very low rates and the downward pressures.
Okay. And do you think it will lower uptake on the reverse repo facility, or that's just not even really a focus of what the change was?
It's not. It's honestly, and the funny thing, you would think that it would, but we'll have to see. It's possible that would not be the case. Well, that's going to be an empirical question.
Okay, cool. Thank you.
I will go to Gina Smialik, The New York Times.
Hey, Chair Powell. Thank you for taking our questions. I was wondering if you could follow up a little bit on
Greenspan
your response
flashbacks,
to
right?
Rachel at the very beginning, and talk a little bit about how we should understand what full employment means in a world that, as you mentioned, is pretty roiled. All the data has been pretty roiled by the pandemic, and we're not really sure where EPOP is going to settle in. We're not sure where participation is going to settle in, and wages are already looking, decent. So I guess I wonder what full employment means in this context, and sort of how you're thinking about those wage data.
Yeah.
What's he writing down?
There isn't one indicator we can look to, and there's no one number that we can therefore point to. We look at a range of indicators, and it's a very broad range. You can count to a high number just quickly, but certainly it will include things like unemployment and participation and wages and many different flavors of that. So how do we think about it? A couple things. We're all going to be informed by what we saw in the last cycle, which was labor supply outperforming expectations over a long period of time. Now, that hadn't happened in many other cycles, but this was a very long cycle. So we're going to have to be alert to see whether that can happen again. It's a different economy. We have had a slew of retirements, and that may weigh on participation. That effect, though, should wear off in a few years, and as you move through that window. because people would have retired anyway, and you'll be back where you would have been. So I think I think the lesson number one is just to be careful about assessing maximum employment.
I mean, he's explaining it very well.
I think if you, during the last cycle,
it's empty,
there were waves of concern that we were reaching full employment as early, as 2012 when I arrived at the Fed. And, 8 years later, we were still creating jobs. And it was quite remarkable. So we're all going to be informed by that. At the same time, we understand this is a different economy. The demographics people are getting older, and that should have a secular effect of reducing participation over time. So we have to be sensible about what can be done. But I think we're going to lean into that and be optimistic. You asked about wages. We're seeing wage increases. That's sort of a natural thing to be seeing in a strong economy. And what we're seeing is that we don't see anything that's troubling in the sense of what would be troubling would be, very wide across the economy, wages at unsustainable levels without high inflation. In other words, wages in excess of productivity and inflation by a meaningful amount broadly across the economy, sort of forcing companies to keep raising prices and getting into a wage price cycle. That's the old formula one of the old formulas for having high inflation. We don't see anything like that now. We do see high wages. We see them for people who are mostly new, entering into new jobs, many of them in low-skilled jobs. And but we do think you've got a thing in the labor market right now where supply and demand are just not matched up well. And we think it's a flexible economy, and it will clear. There will be a level at which
is the printer hidden behind the curtain,
and we think that'll be happening in coming months. So, but the last thing I'll say is, again, if you look at the forecasts, we're going to be in a very strong labor market pretty quickly here.
Wages in excess of productivity.
People, and we're not going to forget about them. We're going to do everything we can to get people back into work and give them the chance to work. But there's every reason to think that we'll be in a labor market with very attractive numbers, with low unemployment, high participation, and rising wages across the spectrum. So that's a little bit how we're looking at the labor market.
Thank you. Now we'll go to Hannah Lang.
VWAP's there. You just can't see it because I'm not.
Hi, I wanted to ask about the status of your thinking around the supplementary leverage ratio right now. Is the Fed still thinking about ways to permanently adjust this to account for the high growth in deposits? And do you ultimately believe a permanent fix is needed? And any information on the timing around that would be helpful.
I can say is we're working on it. Don't have anything to share with you in terms of the particulars or the timing right now, unfortunately. But we've always, our position has been for a long time, and it is now, that we like the leverage ratio to be a backstop to risk-based capital requirements. When leverage requirements are binding, it does skew incentives for firms to substitute low-risk assets for high-risk ones. It's a straightforward thing. And because of the substantial increase in reserves, treasuries, and other safe assets in the banking system, the SLR is rapidly ceasing to be the intended backstop for our big firms that we want it to be. So we do think it's appropriate to consider ways to adapt it to this new high reserves environment, and we're looking hard at the issue. We would also, just to be really clear, we will take whatever actions are necessary to assure that any changes we do make or recommend do not erode the overall strength of bank capital requirements. So sorry, I can't give you any more. That's just something we're working on.
Interesting.
Thank you. Now we'll go to Anakin Tappa at CNN Business.
Hi there. Thanks for taking my question. Chairman Powell, the price jumps we've seen in some raw materials, lumber, for example, you mentioned it earlier, seem to be easing, and it looks like we're in the beginning of suppliers catching up with demand. But I wonder if you're worried at all if we're going to end up with excess supply immediately after those shortages wear off, and if we just continue this mismatch as we're recovering and getting out of the pandemic economy. And I wonder how that would affect the Fed's outlook at all.
Well, that is really not the problem we're having right now. But actually, people who work in commodity industries are very focused on that because they know that, they don't want to build capacity and then find out that it's not necessary. So really, the problem now is
James,
that,
how is it, Dan?
demand is very, very strong. Incomes are high. People have money on their in the bank accounts. Demand for goods is extremely high, and it hasn't come down. We're seeing the service sector reopening, and so you're seeing prices are moving back up off their lows there. But in terms of overcorrecting, I mean, I think there is a possibility on the other side of this that inflation could actually be quite low going forward. But that's not really where our focus is right now. Our focus right now is we need to. Our expectation is that these high inflation readings that we're seeing now will start to abate, and that's what we think, and it'll be like the lumber experience and like we expect the used car experience to be, with things like airplane tickets and hotels, which are the other two factors in the most recent CPI report that went up a lot. We expect that those prices will get back up to where they were, but there's no reason to think that they're going to keep going up a lot. Because if they are, people will build new hotels. There's no reason for supply and demand to be out of whack in the hotel business over any period of time. So we think that'll happen. I think in terms of the timing and the effects on inflation in the near term, there's a lot of uncertainty. The overall story is one that we think is right, and we think the incoming data support it. And so do many forecasters. And if you look at the forecasts on the FOMC, you will see that as well. But we don't in any way dismiss the chance that it can work out that this goes on longer than expected, and the risk would be that over time it does begin to affect inflation expectations. And if we see inflation expectations and inflation or inflation moving up in a way that is really materially above what we would see as consistent with our goals, and persistently so, we wouldn't hesitate to use our tools to address that. Price stability is half of our mandate, and we would certainly do that.
Yeah, VWAP cross is good.
That is not our base case. And
no, on the SPY, I don't know. We have to wait till this is over.
There's a lot to be humble about among forecasters. Forecasters have a lot to be humble about. It's a highly uncertain business, and we're very much attuned to the risks and watching the data carefully. In the meantime, I would say, we should, as I mentioned earlier, there's so much uncertainty around this. It's just a unique situation that we need to see how things evolve in coming months and see how that story holds up and act accordingly.
Thank you. We'll go to Howard Schneider at Reuters.
Howard Schneider, Reuters. Thanks, Chair Powell, for taking this. I don't want to miss the moment here, and I noticed that in the statement you dropped the language saying that the pandemic is weighing on the economy. So is this the effective end, in your view, of the pandemic as a constraint on economic activity, even though it's still cited as a risk?
It's a continuum, right? What you've seen with the pandemic is sharply declining cases, hospitalizations, and deaths, and that's great. And that should continue. But you also saw in the United Kingdom, which has, I think, at least as high, if not higher, vaccination rates. They've had an outbreak of the Delta variety, and it's causing them to have to react to that. So you're not out of the woods at this point, and it would be premature in my thinking, it would be premature to declare victory. Vaccination has a ways to go to get to levels. It would be good to see it get to a substantially higher level, and that can only help. You're right. The statement language is evolving. I would expect it to continue to evolve. There's a lot of judgment in that, but you can expect us to drag.
They just watched the stream, Grizzled Primate.
That's what you do with statement language. It's great to see the progress, but again, I would not declare victory yet. I would say it is so great to see the reopening of the economy, though, and to see people out living their lives again. Who doesn't want to see that? And it appears to be safe, and I just would encourage people to continue to get vaccinated.
If I could follow up on that, if you view the statement in toto and the dots and the steps as well, do you think this is more a mark-to-market exercise around the improvement in health or around the inflation risks you see developing out there?
I think it's both. No, I think clearly since March, what's happened is people have grown more confident in these very strong outcomes that they'll be achieved. Very strong outcomes in the economy will be achieved. There's more grounds for confidence. We've seen growth
Thanks,
coming higher
Bama.
than we expected.
I appreciate
We've
that.
seen very strong labor demand. We've also seen we have seen inflation above target though, and I think
No, they always do their conferences while the
our
market's open.
forecasters' case, they do see inflation coming back down over 22 and 23 into areas that are very consistent with our mandate. Nonetheless, the risk is something that can factor into people's thinking about appropriate monetary policy. The thing is, these are 18 different forecasts, and I can't stand here and say exactly what was in all 18 people's minds, but that is something that I think can factor into things as well, factor into our forecasts as well.
Thank you.
Thank you. We'll go to Victoria Guida with Politico.
GME is right there on the screen, bottom left.
Hi, Chair Powell. I want to
going
ask
up?
a little bit more about inflation to make sure I understand
Kushner.
how you're thinking about this. So in the projections, inflation is expected to be high this year and then come back down next year and then maybe start to rise a little bit.
I've seen
again,
those
and that's
announcements
for
come in
a
during
look
the
out in
trading day,
2023. I know that's
but it's
obviously
usually after
take
hours.
that with a grain of salt, but that would
In
suggest
Jimmy's
that
position with the SEC
you all
investigation
feel
going
that if
on,
we
probably
see
at after
inflation
hours.
sustainably staying above 2%. And so I guess my question is, what would be causing that inflation? What would be, because it seems like you all now see a situation in which inflation would be rising in a way that isn't caused by transitory factors in the next couple of years. So would that be the result of a tight labor market? Would that be because this whole situation has raised people's inflation expectations? How are you thinking about that?
So what we're seeing in the near term, again, our base case is that what we're seeing in the near term is principally associated with the reopening of the economy and not with a tight labor market or tight resource constraints, really. But you're right. When you get to in the forecast, all of that, the supply and demand sides of the economy adapt. We have a very highly adaptive, flexible economy, more so than most. And by 2023, those increases are really about rising resource utilization, or to put it a different way, low unemployment or high employment is a way to think about it. So that's what that's about. That's about the kind of broad inflationary pressure that results from a really strong expansion, tightening up resource utilization across the whole economy and lifting up inflation. That's why, and that's why you would see it then, because by then, in the forecast, and it's just a forecast, they're just individual forecasts. In people's forecasts, that's what's happening.
So the change in the projections reflect the fact that you all are more optimistic about the economic outlook, and not necessarily that you think that this will change the way people think about inflation.
Yeah, I think there may be an element of the latter as well, because inflation expectations have continued to move up. It's all in people's individual thinking, and you can't. It's hard to say. It's not something the committee debates in terms of what the outlook is for 2023. So I'm a little bit speculating, which I shouldn't do. But I wouldn't surprise me if there's an element for some people in seeing the inflation performance that we've had, and thinking that I have more confidence that we could see inflation above 2%. That it may not be as hard to do that as we thought. And that inflation expectations may move up to a level. They were really at a level that was kind of a little below 2%. They might move up as a consequence.
Inflation's in your head, yeah.
Or as a consequence of the new framework. We did see inflation expectations moving up in the wake of the announcement of the framework, but we don't really know that. So ultimately, I think it's consistent with both those things.
Thank you. Now we'll go to Greg Robb at MarketWatch.
I'll be right back,
thank you
guys.
for taking my question. Chair Powell, I'm just looking at the forecast, and the one thing I just don't think it's been talked about all that much is how much you guys, the Fed thinks that the economy is going to slow next year. I mean, are we looking at a scenario of a slowing economy next year as with higher inflation? And what do you think about that?
We're looking at an economy that will not have the degree of fiscal support. The fiscal support in the forecasts is much less than it was this year. So, but you've still got a very strong growth, well above the longer run potential output of the economy. You've got growth meaningfully above that, and inflation is lower next year in all of our forecasts. I think the range of core PCE forecasts for next year is 1.7 to 2.5 in 2022 and 2 to 2.3 in 2023. So you're right. You're seeing. I can't remember the number, but it might be in the 3.5% growth for next year. That's a really good year. Coming on the back of a 7% growth year, that's a really good year. That's a year with a lot of momentum. That'll cause significant job creation, and it will. I mean, we would take 3.5%. We didn't have a 3.5% growth year. We didn't have a 3% growth year between the global financial crisis and the end of the expansion. So that would be a good year.
Doesn't it seem like there's a risk of like stagflation, where that you're going to go from 7% and down? That means the economy is really dropping in some way. We haven't seen that, right?
The economy's not the economy is still growing, and growing at a very healthy rate.
Did I miss anything important?
Our estimate, I mean, different people have different estimates, but broadly speaking, economists think the economy has the potential to grow at around 2% per year. If you're growing above that, then the unemployment rate should be declining. People should be being pulled into the labor force. Wages should be going up. Lots of things should be happening. Businesses should be investing. So, I guess to answer your question a different way, is there a risk that inflation will be higher than we think? Yes. As I said earlier, we don't have any certainty about the timing or the extent of these effects from reopening, and therefore we don't think that we think it's unlikely that they would materially affect.
I mean, he's saying a lot of like
inflation
safe
dynamics
things,
that
right?
The economy's had for a quarter of a century. The underlying forces around the globe that have created those dynamics are intact, and those are aging population, low productivity, globalization, all of those things that we think have really held down inflation. All that's out there still. When we get through this, we'll be facing those same forces. Nonetheless, is there a risk that inflation will remain higher than we thought? Yes. And
I
if
saw
we
the
see
feeder bar
inflation
drop to
moving
0.6
above our goals in a time, to an extent, to a level or persistently enough, we would be prepared to use our tools to address that.
Thank you. Going to Brian Chung with Yahoo.
Powell, Brian Chung, Yahoo Finance. On that point, you talked about maybe some of the more structural changes in that last answer with regards to productivity. I noted that the median projection for R-star, the longer-term interest rate, is still the same at 2.5%. But there's been some literature out there that maybe the COVID crisis could have actually changed some of the underlying fundamentals of the economy and maybe changed productivity, in addition to combine with demographic changes that have already been in effect to suggest that that longer-term neutral rate, or R-star, might be higher. What would the implications of that be for monetary policy? Do you think that maybe the Fed could have the possibility of underestimating the long-run neutral rate, and what might be the impact of that?
A higher neutral rate would mean that interest rates would run.
I'm hours behind on the stream. Ignore me.
And that would be a good thing from the standpoint of the economy, because it would give the Fed more room to cut rates. The problem
that
with
guitar
interest
is a
rates being close to
decoration.
the lower bound, of course, is that it really cuts into our ability to react to a downturn. For example, a pandemic. And if you look, for example, at the European Central Bank, their policy rate was well below zero when the pandemic hit.
Was
so
that Andrew Bobani?
Can't react.
That's
A higher neutral
racist.
rate would be from
That guy's
narrow
obviously not a
standpoint,
data
would be a good thing
scientist.
for us. It would give us more room, and therefore, then that would tend to result in better outcomes for the economy over time. You can't estimate it with great precision, I think we would be alert to, I mean, studying R-star is a whole industry unto itself, and I think we would be alert to.
Is J-Powell wearing shorts? Is the real question.
R-star, the neutral rate of interest, and we'd try to keep up with that, and I think we're all thinking about that and the possibility of that. There are a lot of stories right now.
Why is GME going up?
Essentially could lead to higher productivity growth.
It's like no volume. It's just going up.
We don't know which of those stories will come true, but I mean, I'll give you an example. It's just there are a lot of startups.
GME being lifted by broader market sentiment.
Is that going to have that effect? We don't know.
Swearing
but we'll be watching those things carefully.
Great. Thank you for the last question. We'll go to Michael McKee at Bloomberg TV.
Mr. Chairman, of course, you'll be shocked to learn that you have some critics on Wall Street, and I would like to paraphrase a couple of their criticisms.
Say lift off.
To them. One is that the new policy framework is that you react to actual data and do not react to forecasts, yet the actual inflation data is coming in hot, and you're relying on the forecast that it will cool down in order to make policy. I wanted to get your view on how you square that. Another is that you have a long runway
That's a good question.
for tapering with announcements, but if the data keep coming in faster than expected, are you trapped by fear of a taper tantrum from advancing the time period at which you announced
fancy.
A taper?
He thought about that
and
one
finally,
for a few hours.
You've said the Fed knows how to combat inflation, but raising rates also slows the economy. And there's a concern that you might be sacrificing the economy if you wait too long and have to raise rates too quickly.
So that's a few questions there.
That I don't want to answer.
First, I think people misinterpret the framework. I think there's nothing wrong with the framework, and there's nothing in the framework that would in
no
any
way
way
his producer fed him that
interfere
zinger.
with our ability to
Someone wrote it.
Pursue our goals.
Hashtag taper tantrum.
All of our discussions and all of our thinking and planning are taking place in the context of our new framework. We're strongly committed to it. We think it's well suited to our goals, including in this unique time. And I think if you look at the forecasts that we've written down, our committee is solidly behind them. The forecasts are all consistent with that.
SPY's not really ripping.
Your specific question, I guess, was will we be behind the curve?
Going up.
And that's not the situation we're facing at all. The situation that we addressed in our statement.
Yeah, he doesn't want to answer any of those questions.
Was a situation in which employment was at very high levels, but inflation was low. And what we said was we wouldn't raise interest rates just because unemployment was low, employment was high, if there was no evidence of inflation or other troubling imbalances. So that's what we said. That is not at all the current situation. The current situation, we have many millions of people who are unemployed, and we have inflation running well above our target. The question we face with this inflation is nothing to do with our framework.
Yeah,
it's
SPY and the S&P are
very
directly correlated.
A very difficult version of a standard a central banking question, and that is how do you separate in inflation? How do you separate things that follow from broad upward price pressures from things that really are a function of
I like upward price pressure.
Sort of idiosyncratic factors in due to particular things. I mean, a classic example was, to pick a narrow example, was the cell phone price war back in 2017, if you remember it. There was prices were incredibly low, and it held down core PCE by 0.3 or something for a year, and then it fell out. So this is much bigger than that. And of course, it's not easy to tell in real time which is which, but that's the question you would face under really any framework. And we're trying to sort that out. I've tried to explain that today about how we think about that. And you
T-minus 31.
Think that these are temporary factors and that they'll wane. We can't be absolutely certain about the timing of that, and we're prepared to use our tools as appropriate. Your second one was, we will taper when we feel that the economy has achieved substantial further progress, and we will communicate very carefully in advance on that, and that's what we're doing. That's what we're going to do, and we will follow through on that. There's no, I mean, we will do what we can to avoid a market reaction, but ultimately, when we achieve our macroeconomic goal, we will taper as appropriate. The third thing was, what was the third thing?
If you raise rates to control inflation, you also slow the economy. And the history of the Fed is that sometimes you go too far.
Coffee.
And look, I mean, we have to balance the two goals.
It's got a nice
maximum
Elliott
price
wave
stability.
for
Often
hair.
they do pull in the same direction, of course. But when we raise interest rates to control inflation, there's no question that it has an effect on activity, and that's the channel, one of the channels through which we get to inflation. We don't think that we're in a situation like that right now. We think that the economy is recovering from a deep hole, an unusual hole, actually, because it's to do with shutting down the economy. It turns out it's a heck of a lot easier to create demand than it is to bring supply back up to snuff. That's happening all over the world. There's no reason to think that that process will last indefinitely. But we're gonna watch carefully to make sure that evolving inflation and our understanding of what's happening is right. And in the meantime, we'll conduct policy appropriately.
Thank you, Mr. Chair.
Thank you very much.
Is that the end of it? All right, yeah, that's the end. Well, that was a bunch of nothing. So, face what he said, deep hole twice. Clueless grandpa. Watch carefully, meanwhile, GameStop 400% short. Well, they said they had no intention of weakening capital requirements. That was interesting. He's got to go print more dollars. SPY confused. SPY should be. Nothing was said, but inflation's still showing really high, right? Like, inflation's showing high, and the Fed basically just said that they're not going to step up to meet that inflation demand, right? By raising interest rates. So that means if inflation keeps going and they don't step up in time, then they're going to have to overcorrect to fix that. Deep hole, bearish. Yeah, I agree. Saying deep hole more than once in any Fed conference is probably recovering from a deep hole. He didn't say buckle. Go SPY, go burr. SPY's not going burr. SPY's coming back down. SPY's still going to stay weak and choppy, right? What they're doing is they're trying to keep a window open so that they can just, like, bang out some interest rates if they have to with no warning. And that doesn't, like, lead to a feeling of confidence in the markets. Can the squeeze start now? I don't know. Maybe. No, probably not. I don't think that's going to kick the squeeze off. Maybe if the market crashed. GME was doing some pretty weird shit during that downturn, though, right? That was interesting to watch. Doesn't SPY kind of track inflation? A little bit. Just inflation has been 8% annualized the last 3 months. So it's not a hard course correction. Yeah. Yeah, I mean, Apple and Microsoft are, like, a big part of the SPY's holdings, right? So that makes sense. Burry's new tweet says whistling past the graveyard already over. They just continue to ignore it. Yeah, but Burry can be quite early. I mean, I'm going to continue buying SPXX calls for the foreseeable future. Because, you know, I spend a couple $100 a week on them. But, like, when they print big. But we'll see. I still think there's some other things going on that, you know, he kind of refused to address. That's some SPXX for 716, yeah. SPX SX is an inverse ETF. So it's short the SPY times 3. Weighted 3 times. 100 different parties doing nothing because they know it will crash the market. They're waiting for someone else to crash the market. Yeah, it's a giant standoff, right? SPXS. SPXS, like Sam. Yes. Yes, SP extra small. You got it. Any reason for the SPX instead of another inverse leverage ETF such as SQQQ? No, not really. SQQQ, is it inverse? Is it leveraged at the same rate? I mean, SQQQ's inverse the NASDAQ 100 index. So a little different than inverse the SPY. GME. All right, I think we can go back to our regular chart for now. Thoughts on mortgage default suspensions expiring June 30th? I mean, you're going to see a lot of defaulting. As soon as those suspensions are lifted on the mortgages, I think you're going to see like record levels of default. Yep. You don't hold you don't hold leveraged ETFs for long term. That's why I play them weekly. I don't play them like I don't buy them leaps on the SPXX. Yeah, it's a boring week for GME. Welcome to April. Did it, what again? Sierra Papa Sierra X-ray. And it's right on the fucking calls are on the screen. You guys can read it. It's right there on the right. It's to the right of my head. Perm is blocking it. It is not. You're right. Because I'm on the right side of your screen. Right here. Like this one. See the options? There and there. He passed say anything. See, he was just as boring as he always is, but he didn't address a lot of concerns, unfortunately. It made me feel good. let alone squinty vision says. Well, maybe you need to get some glasses, Jonathan. Your vision issues should not be my problem. Should you explain theta decay? Yeah, it's a premium on an option that decays over time as you draw closer and closer to the expiry date. Theta. Turn up your quality. J-Pal like Neo in the Matrix dodging bullets. That's why he's got the job. It's for sure, it's sure as hell not his knowledge of the economy, right? How would I round out that 45 GME to a clean 50? I've got so much. I don't need any more. If I buy it all up, there won't be any left for anyone else. I've already bought way too much of this stock. Because they only actively move when something happens, Andrew. We can send some my way. Oh, hey, 221. Look at that. Guys, are we going to close positive for a day? So you're trying to be worth 45 billion. Sounds a little greedy. I'm a greedy dude. I'm greedy as fuck. Hot take, you're not streaming MOASS because you're going to sell pre-peak? Absolutely not. Gonna close 221.92. Probably. 221.50 would be cool. Or 222.50. How much could SPXX go up in a hypothetical crash? Well, we can look at that. We go out to the daily and look at March of 2021, and it went up to, or not March of 2021, sorry, 2020. It went up to 288.50 at its peak. So, a lot. Yeah, it was up past 137,000 a share in 08. Yes. Holy cannoli. Yeah, it can jump. It can jump really, really hard. Yep, per share. $130,000 per share. It could get high again if the market crashes even harder, right, Andrew? I don't care if it hits 100,000 a share, right? Like, we haven't seen the tail. I could be a mermaid. AMC going burr. Ooh, look at it. Let's do a little jump. Little jump, jump. YouTube iOS app, worthless junk. Yeah, I've heard. Do you buy and hold SPXX? I just options. I just buy calls on it. Like out of the money calls. Plus 1 cent end of day. We'll see. This is a very weird, choppy ending to the day. Look, WeBull's always shown it. Market crash more or less expected. We'll see. Double top. So looks like the market's going to come down before close at least. Market's just, it's just not super stable right now. I don't think like people are, I don't think he was reassuring enough. Forecast 2023 rate hike. Eh. Ooh. Look at that, guys. Temper the excitement. Look at us go. Oh my god. GME positive on the daily. Constant growth is back. What a waste of 1.3 million shorts, right? Sell-off might be complete. This might be the strongest price action we've had in a few days. Right up to 225, man. Dopamine. Elliot Fibonacci finally getting to exponential work. Ooh. Is this just because the bid-ask spread is absurd? Yeah. Oh god, nobody's saving shorts. There's not some big stockpile of short shares that they're like, we're gonna unleash these all at once. No. They 90% of the shorts they're using, they need to use to suppress the price. Poke it, Wilberforce. Short hedge fund circle jerk in action. Just put it over the stock. Watch it rise. As they mayo all over it. 227 feels exciting as 320 to 345. Because it's movement. Any movement feels good. And you killed it. I put too much mayonnaise on the stock. I just vomited. Elliott Wave guy having some sort of gasm right now. Is he? We're still not at 580. Didn't he predict 580 by the end of the week or some shit? When do you think we'll see a dip for me to buy one more share? I don't know. Why don't you just buy one now and stop asking for a dip, Moonwind? Don't be a dickle, all right? The stock's going up. You should be happy. Oh, but my dip. What about my dip, guys? Fuck you. If you like the stock, buy it. I still love you, Moonwind. Yeah, it's uptime. We're all tired of dips. I know what you were looking for. It's a pigeon whale? You have to be in here for a long time. Yeah, if you had one SPXX call in the 08 crash, you would have been up like $1 million per call. Sassy Creek is pretty great. Carly Ray. No, but this is a bull flag. If you guys wanted to know what a bull flag looks like, this is one. Bull flag. Is this the cup and handle? Not yet. Isn't as old as American Horse Pirate. American Horse Pirate was pretty great. Not a baby bull flag, just a bull flag. Is this Elliott Wave? No. Back to bull flags. Thank God, man. I was getting tired of this dippy sideways shit. And now GameStop just needs to be like, yeah, we sold all the shares at 280. And then we can fucking wrap this shit up and I can get on with my yacht life. Maybe. I mean, the people on Wall Street know when the sell-off is over. We just don't know because we're retail and we're not like aware of these things. Bullish engulfing. Yes. Engulf the bull. Become the bull. What makes this formation a bull flag? The very strong run-up over a few candles into a period of downward consolidation on less volume. These tend to break to the upside. They're looking to average at 255, but I hope they just sold a bunch at 300 and 280. And they announce a number higher than 255. Because then we just, like, we're going to go up to that number, or whatever it is they announce. How far do you like? Week? I just do them weeklies. I made a bunch of money on them in March. But that was because I was also buying them from like, I started buying them like end of December all the way through March. And so I ended up spending, I think it was like 5,000 or 6,000 on calls, but I made a lot off of them when it spiked. There was some guy that like shorted the market like every day for like 6 years, or from like no, it was from like the .com bubble through 08, and he just made like he made like $87 million off the crash in 08. Way out, like say January 22nd. GME's up because I bought a Switch. You pay more for leaps, right? I mean, I have you have June 25th right here for SPXX. Oh, wait, is this GME? This might be GME. Hold on. Huh. Did they change this? What are these? I guess you can only buy monthlies now? Did they rebalance this? XP... It's written on the fucking screen. Huh. Oh, weird. Alright, no weeklies. Say monthlies. Yeah, I know some people have 25th of June. So maybe this is just WeBull doesn't have them. So what you're saying is, I mean, you have a better chance of winning on SPXX calls than like the lottery, right? SPSF. I think they changed something. They used to have, maybe I'm thinking of like, just thinking of the VIX. VIX has weeklies. Or SQQQ. Does that have weeklies? Okay. So I guess they don't have them on this anymore? I bought UVXY. Maybe, yeah. You can buy shares of it. SPY coming back down again into close below VWAP. GME also coming back down, but still positive. Are we going to get that 222.50 close that I dreamed of 10 minutes ago? Moose. SSX tricky. This doesn't look good. It looked like it tried to break out and it failed. So, also downward pressure from the market. The JPow said lift off at least 12 times. It means nothing. So I wrote that JPow said lift off 12 times on Reddit. Just so they can feel some of the excitement we get to feel over here all day. But yeah, it doesn't really mean anything. Triply. He just kept saying lift off. But negative beta. That's not how that works. We got 30 seconds. See you later, CJ. No! I don't want to close negative. Go back up, you piece of shit. Did you say buckle up? No. Oh, 10 seconds. Wait, we can do it. Peace out, dude. Thanks. Wait, hold on. Hold on. It's saying 222.84. We did it. We did it. We closed positive. 84 cents above max paying, guys. Green Day fuck yeah. MOASS confirmed. 222.97 of Fidelity. All day for 84 cents. You know it, but we're up. My end of day prediction off by 34 cents. Go figure. Later, guys. Thank you all for tuning in. I will see you bright and early tomorrow morning for hopefully a day of less sideways and more up. Have a good night, guys.